My new book is out. It's called Car Shopping for People That Hate Car Shopping. It's a digital book. You can download it immediately. And for our release, we're doing 75% off. So you can literally go to my TikTok bio, go to my Instagram bio. Right now, you got about 30 minutes while we're on. You could download your book immediately for 75% off. Or you can scan the QR code or go to deshonesbook.com. How do you get around negative equity in the trade-in? Great question. Send your questions in, y'all. Let's get busy. Negative equity. Negative equity on a trade-in. It's only two things you could do with negative equity if you want a car. Negative equity, for anybody who doesn't know, means you owe more on your car than it's worth. So your car might be worth $20,000. You owe $24,000. That means you have $4,000 of negative equity. What do we do if we want to get a new car with that? That can only be transferred or paid off. Don't ever believe anyone when they say, oh, we'll take care of that. No, it can only be transferred to the next car, either all of it or some of it, or paid off. Now, here's what you want to do. Shout out to the sharers. Could everybody hit the share button? Because we about to go real deep financially. If you care about your people, if you care about people in general, hit the share button so that someone else is aware of what we're about to talk about right now. So when you have negative equity, the key is making sure, how do I know I'm really getting, you pay attention, write this down, y'all. If you got a pen, write it. If not, watch the rebroadcast. If not, get my book. You need to, a lot of times, you people are thinking they have negative equity based on what the dealer told them their car is worth. So in my last scenario, I just said, what if your car is worth 20? Well, we don't believe our car is worth 20 because a dealer told us it's worth 20. We believe it's worth 20 because we got cash offers. Remember this, from this day forward, you're going to get cash offers on your car. You are not going, because these companies pay more than dealerships. CarMax, Carvana, Driveway, AutoNation. AutoNation gets dealers to bid on your car. AutoNation is a group of dealers. What it is a big auto group, and they get dealers to bid on the car. Same thing with Kelly's Blue Book, instant cash offer. Listen, y'all, never use kellysbluebook.com to figure out what your car is worth. We don't use algorithm sites to figure out what our car is worth. If you want to know what your car is worth, you take 15 minutes, you go to those sites that I just named, and you find out what they're going to pay you cash today for your car. That is the real indicator of what your market value is. Now, once you have that number, we call our bank, we find out what our payoff is. That's how much we owe. And once you find out your payoff and you have your offers, you'll know if you have negative equity or positive equity. But in that case, we must decide, if we have negative equity, are we going to pay the difference? And some of you, if you only got $1,000 or $2,000 of negative equity, it's much better for you to pay the difference, sell that car to CarMax, Driveway, pay the difference, so that when you go to shop for your car, you just make a nice, smooth, clean transaction. If you can pay the difference from the highest bidder to what you owe, that's the best thing. You got a couple thousand, that's the best way, because no one else is going to offer you that much money like these other companies will. So that's how you can only transfer that negative equity over, pay the difference, or you got to wait. Some of you, 8, 10,000, 12,000 of negative equity, you got to wait. You got to pay that. You got to pay that down. You can't transfer that type of money over to a vehicle because you're not going to get approved. So 2 situations where you can't get a car: too much negative equity, you got to wait, or super bad credit, got to wait. If both, you got to wait. 5,000 negative equity, John Doe, isn't horrible. You could the sites are, somebody asked what's the sites: CarMax, Driveway, Carvana, AutoNation, KBB, instant cash offer, and CarMax. Did I say CarMax? CarMax should be 5 of them. And I would throw Car Gurus in there. Car Gurus Sell My Car Now has an option for that too. That's what we're talking about, Thomas. I'm telling you right now, it's not a matter of I have negative equity, please help. Let's stay sober. Let's deal with what we can control. Can y'all shoot up the likes? Can everybody on TikTok just start tapping the screen so we can shoot the likes up? I appreciate you all. If you're getting value out of this, please share or tag somebody that you care about. But it's not a matter of getting crazy. It's a matter of, what can I do? If you have negative equity, that's what you can do. I can transfer this. If I want a new car, the only thing I could do is pay the difference or transfer the negative equity. If I have too much negative equity, when I buy my next car, they're not going to let me transfer all that negative equity over, because the bank's only going to lend a certain amount of money on a car. If the car is $20,000, with good credit, they might lend you 26. They might lend you 20% of the value of the car above it. That's called loan to value ratio. They might lend you 26, which means your taxes got to be in there. Your fees got to be in there. Any negative equity that you got put in there. See, the only people who are going to have a problem, who's going to have a real problem transferring negative equity, is when you want to do no money down deals. We do no money down deals all the day long. When you read my book, when you learn from my videos, most of the time we're doing no money down deals. Only time it makes sense to really put money down is when we're buying a car, we're going to keep it a long time, and we want to make sure we lower the amount that we're going to be borrowing, or we want to pay it off quick. But in cases where, like, we're leasing, we say, okay, we get a great lease deal, no money down. I'm not going to put any money down. If I could get the payment where I want it with no money, that's where I'm doing that. So when you try to do no money down deals with negative equity, you're going to have an issue depending on how much negative equity you have. Because if the car is 20, for example, taxes are another 2, fees are another, let's estimate 1,000, that's 23. Now, the bank's only going to approve 25, max 26. That means you only got a couple thousand before you're above the loan to value ratios. If you got $5,000, $6,000, $7,000 negative equity, that's not going to work. You got to go to a higher price car, unfortunately. Many of you should be going from negative equity to a lease, because that's the cause of your negative equity in most cases. You're switching cars while you still have loans on them, and you don't understand leasing. That's your problem. If we were going to get real deep right now, which I won't, because I want to get to more questions, if I'm going to diagnose your problem, I could tell you how to cure the cancer, I could treat the cancer, but and then I could tell you how to cure the cancer. What's causing the cancer? Well, that's just the cause. You buy cars, you don't keep them, you take out loans, you trade them in, and you don't understand leasing. That's why you have negative equity. Thank you, man. I appreciate that. Currently deciding, should I pay the negative equity? It's $8,000. Yeah, MRO. It's a tough position. It's not easy. Again, once you see that you could either transfer it, pay the difference, or you got to pay it down, that'll at least help you to decide which way to go. All 3 of those are in my book, Car Shopping for People That Hate Car Shopping. Get your copy for 75% off. It is our book launch sale. So while it's on sale for 75% off, go to my TikTok bio, go to my Instagram bio, and get your copy for 75% off. Go to deshonsbook.com, scan the QR code, get it. It's all in there. But I'll be talking about that. This is a very common subject that we will never stop talking about. What is the general credit requirement for leasing? Good question. Somebody asked, what's credit requirements for leasing? It's not usually about score. Biggest thing you could have is a good score. 680 or better really keeps you out of the manipulation zone, where somebody might approve you and say, oh, you're approved tier 4. We don't want that. You don't want to go in and shop your lease and they tell you payment's $400, and then when they submit you to the banks, you get approved and they say you're tier 4. Now your payment goes up to $550. So I call that the manipulation zone. When you're in that 660, 650, 640 score range, that's it's easy to manipulate. Now, the way we get around that is we always have backup offers. So if somebody tried to manipulate us, we got to go to the backup offer and make sure that because they could be telling the truth that we really are approved tier 4, or they could just be trying to take a shot at us to make some more money on us. But when it comes to credit profile, you want score first, payment history second. If you got a car that you paid on time for the last year, 2 years, usually it's easier for you to get approved for a car. Nothing tells a bank that you're going to pay your car payment like a history of paying your car payment. So with Mercedes, you could literally have your whole life crashing down around you. You could have credit cards late, but if you paid Mercedes on time, they will approve you almost every time. We've had that happen. Like when I was at the dealership, y'all don't know if some of you, this is your first time seeing me. I worked for Mercedes for 5 years. I worked for General Motors for 5 years. I was in the car business for 14 years. And we would certainly have people who would come in, call Deshone, man, the credit's not where it was when I got my last car. And I said, listen, how was the payments on the Mercedes? And always on time. I never missed the payment, but my credit card, whatever. Mercedes was approving them. So those payment history, those are the two, car payment history and score, weigh the biggest, I would say, in your profile. Now, the secondary things are like how long you've been on your job, how long you've lived at your place, how much money you make, can you prove that money? Are you employed? Are you self-employed? These are kind of the secondary things that that the banks look at. But those two things weigh the heaviest for sure. It's no hard, fast rule. It's just, profile. Thanks for the knowledge. Hey, Michael, I'm currently shopping for a vehicle. You've helped me tremendously. Appreciate you, man. This is what we're here for. Anybody that will listen, you're going to save thousands listening to me. So anybody who's willing to listen, this is all we do. We got people all around the country that I'm blessed to work with. Somebody like this, Danielle. Danielle leased an Audi. I'm showing it. You can't see it on TikTok, but it's on the other platform. Danielle leased her Audi. She got $550 a month. First payment down, including maintenance, gap insurance, all the fees. $44,175 car, y'all. Just so you understand. For those of you who were taught never to lease, who was taught never to lease? Be honest. I want you to type me if you were taught never to lease. The more you learn from me, you'll see that advice has cost you thousands of dollars. Sorry to tell you, whoever told you that owes you money. They do. Because for people who are not keeping their cars 8 years, you are losing thousands of dollars not leasing, because depreciation is killing you. When you buy your cars, they're killing you. The only way to win with a car long-term is to keep it long-term. You can't win with a car short-term. 3, 4, 5 years, they lose too much value. Unless you buy cheap cars. I always want to get a caveat, because somebody on here like, Deshone, I buy cars, Facebook Marketplace, $5,000. I ain't never lost on them. That's different. That's different. That's a different strategy. $5,000, $7,000 cars, different strategies. I'm talking about people that buy mainstream cars, 3, 4, 5, 6 years old. You're losing thousands of dollars compared to somebody like Danielle. She's driving a $44,000 Audi, $550 a month. That same car, $44,000, if she purchased it, no money down, her payment's $900. Y'all know what's the rule of thumb? Every $5,000 is how much per month? Let's see who's been with me for a little while, who knows this. Every $5,000 you borrow is how much per month? I'm gonna see if anybody chimes in before I say it. Thank you, Ms. Rez. Ms. Rez, DM me. You got a free copy of the book. Ms. Rez, DM me. I'm gonna give you a free copy of the book. If you already got yours, then I'll give it to you. I'll give you the refund back. You came in first. DM me. I'm gonna send you a link to get a free copy of my book, Car Shopping for People That Hate Car Shopping. Everybody else, you can get it for 75% off. Click my TikTok bio. Click my Instagram bio. Go to DeshonesBook.com or scan the QR code. Get yours for 75% off. But yes, that is it. $100. So when you look at somebody like Danielle, who I just posted up here, who got her car, $44,000 Audi, that vehicle would have cost her $900 a month to purchase it. Now, sometimes you could take a year longer on the loan. Think about that. You go from 5 years to 6 years, and maybe it drops her from $900 to $800. Nothing is going to drop her to what she's paying, $550. That's what I say. Step one in my book, the book is 7 steps. Step one, and what I'm going to teach y'all forever, is you always need to decide whether I'm buying or leasing. And that had the answer. How do you know that? Something called the 8-year rule. The 8-year rule says, hold on, I got an unstable connection here on TikTok. I don't know why. The 8-year rule says if I'm not keeping a car, and I created this rule, if I don't keep a car 8 years, then I should be leasing it. Because in order for you to win purchasing, you got to keep it 8, 9, 10 years. Compared to somebody like Danielle. Danielle out here driving cars for pennies on the dollar, getting great lease deals. And every lease deal is not created equal. So don't think that these things y'all see on commercials are lease deals. These are not deals. These are they ain't deals. They're not deals. Put it like that. They're not good deals. So don't ever look at a commercial and say, well, it's actually better if I buy it. They want $7,000 down. You saw what Danielle did. $550 a month, no money down. So I was watching you this morning. I'm about to buy a car and I hate it. Listen, Lala, I appreciate it. If you use what we teach, you will love it as much as you can. You will love it. You have to change the process. What I want y'all to have, shout out to everybody hitting the screen. Could y'all keep tapping the screen on TikTok? Let's keep the likes going up. Everybody watching, we're on 4 platforms right now. You must have your process. The process with dealerships, y'all, I'm from that world. I was there for 14 years. The process is a $1 billion process. The marketing, the commercials, the coming at the end of the month, coming at the end of the year. Imagine being in business, y'all, where you have programmed your customers so well that you knew every day at a certain time or every month at a certain time, this place is going to be packed. Imagine that. That's the car business. The car business has, through marketing and through the things they've done, programmed the public to say, oh, I'm going to come at the end of the month. I'm going to come at the end. I'm going to go on a Saturday. We're not getting better deals when we're going in when everyone else is going in. So just understand, in order for you to win the way I want you to win, and it's going to be easy. It won't be hard. What's hard is doing it that way. What's hard is being a part of that system in that game. You step out of that and you shop your way, which is my way. And you try my way. I've had thousands of people since 2021 try my way of shopping, and the majority of them will never go back to the old way. And we shop from home. We get bids. And so when you start doing that, Lala, you're going to find that you're enjoying the process as much as you should be. Daggone shame you're going out here and spend $40,000, $50,000 of your own money, and you got to go through a daggone gauntlet and feel like, dag, I got to be abused and daggone beat up to give you $40,000 of my money. Never lease. The limit, how many miles you can drive. Is that true? No, they don't, Thomas. Thomas, this is a big misconception. Thomas just put never lease, the limit. And I think you were asking, I think you were asking a question more so making a statement. Because you said, is that true? It's not true. They don't limit your mileage on a lease, y'all. You choose the mileage. Now, if you are driving, the only people who should not be leasing if they're not keeping their cars 8 years are people who, either the ones that buy cheap cars, like I talked about, or the people who you're doing Uber, you're doing DoorDash. Basically, you don't know how many miles are going to be on the car. The more, the better. If I'm doing Turo or Uber, I would hope to get 30, 40,000 miles a year on my car. I hope it's that busy. I hope it's used that much, but I can't guarantee it. So that's not a good thing. But if you have a predictable lifestyle, somewhat, and you can predict roundabout how many miles a year you're going to drive, you're fine. And not only are you fine, even if you're a little off, the money that you pay getting great lease deals is still much lower then you purchase it. So you choose your mileage. Every brand, I think, has 10,000 miles per year available. Most brands have 12,000 miles a year. Most brands have 15,000 miles a year. But you can build most leases up to 30,000 miles per year. I remember a guy, I was a manager for Hyundai for a very short period of time. I ended up working for a guy, he ended up going to jail. But it was a good experience, 6 weeks. I was a manager. We did very well. It was my first time experiencing a person bringing their lease back. He had 75,000 miles on it. So this was my first time seeing who's a high mileage driver, type HM, if you're a high mileage driver. I want y'all to understand leasing has nothing to do with the mileage you drive. When this person brought all right, so pay attention to this, because y'all lose more money than almost anybody. Because you kill the value of your cars, you buy them, which means you're investing in them. Whatever their worth is, you owe. If it's worth 20, you could go sell it and make 20. If it's worthless, then it's worth nothing. When you put 200,000 miles a year on a car in 3 years, you know, in 4 years, you've destroyed the car's value, at least most of it, right? So the last thing you want is to be invested in that car. I paid 30,000 for it. Now I'm about to destroy the value. So this thing is going to be worth 5,000 in 3 years. This person dropped off his car. He had 75,000 miles on it. It was 3 years old. I said, you leased this? And I'm shocked. See, I'm learning. I'm learning. I love being in the car business and learning why things happen and better financial ways to do things. And so I'm like, you leased this? And he's like, yeah, I once I figured out that I could lease, I pay, $150, $200 more per month, but I could drive my 25,000 miles a year. That $150 a month I was paying was way less than I would lose if I owned this car, bought it, and put the kind of miles on it that I'm putting. See, he understood depreciation. He understood something that I'm trying to help you understand. Depreciation is what kills you. You think you don't pay for the mileage you drive. People have said to me, Deshone, man, I like to drive as much as I want. I don't want to pay for the miles, so I buy. You pay for the miles, whether you buy or lease. If somebody put a brand new car, I see you, MRO. Thanks for buying the book. Enjoy it, use it. And I can't wait to hear your success story. If somebody puts a car outside, parks it outside, brand new car, $50,000 car outside your house right now. If you don't drive it 1 mile and you go out there a year later, is it worth 50,000, y'all? Is it worth? Somebody park a brand new $50,000 vehicle right outside your house. You don't touch it. You go out there a year later. Is that car worth $50,000? Exactly. Thank you. Thank you. Y'all get it. Y'all get it. That's the intro. That's the lesson on depreciation. You see what I'm saying? So if you stay in that vein of understanding, you're now getting close to understanding how depreciation works and understanding that, what do I do to make sure that I pay the least amount of depreciation possible? The way you win against depreciation is to keep the car forever. Who buys their cars and keeps them 8, 12, 15 years? Type keeper. That's what we call a keeper. When we buy a car and we're going to keep it 8, 10, 12, 15 years, that's a keeper. That's a keeper. Type keeper if that's you. If you notice one thing about keepers, you notice how you never worry about resale value? As soon as it was titled, that's right, Chris. You notice when you're a keeper, you never worry about resale value. Could everybody hit the share button? If you are enjoying this, keep lighting up the likes on TikTok. I appreciate it. Could everybody keep tapping the screen? and could everybody share this with one person, they will thank you. You never worry about resale value when you are buying a car to keep, because you are going to outlive the depreciation, whatever value it loses. One day it'll be worth $2,000 and you'll just probably give it to a family member. But I'm here to tell y'all that if you're in that 2, 3, 4 year, 5 year period, your vehicle's going down in value so much every year, whether you drive it or not, you are losing money daily. So if you're losing money daily, when you put 20,000 miles a year on the car, you're losing more daily. So we need to understand leasing allows, going back to this person, leasing allows you to pay for your depreciation up front, build it in and say, I'm going to get me a lease deal where I pay less to lease this car than I would have paid if I owned it for over a 3-year period of time. And that's what the people who get great lease deals do. That's all in the book. I'm going to teach you leasing. I'm going to teach you purchasing, brand new. I'm going to teach you purchasing used. We'll go over purchasing with cash, strategy for that. High mileage driving, strategy for that. There's 3 different routes you want to go if you're a high mileage driver that are better than what most of you are doing. If you're a high mileage driver, here's what you tend to do. Buy your cars, take out 5 or 6 year loans, put a ton of miles on them, come back in a couple years, trade them in, and you always got 10 grand negative equity. Always. The only way you don't is if instead of taking a 5 or 6 year loan, you might take a 3 year loan or 4 year loan. So you paying the car off quicker, but you ain't getting the money back. You're not getting the money back. You just putting more money into the car, but you're not getting the money back at the end. When you go to trade it, you might just break even because you had a short, but look how much money you threw at the car. And some of you might put 10 grand down, 15 grand down to cover your negative equity. I've been around so many high mileage, I've made so many high mileage deals. I know it. It's predictable. That's what happens. Those 3 things happen. The better route is to do what my man is doing, what I told you about, which is a high mileage lease, or you buy one car, you pay that car off, and then you lease a nice car, and now you rotating your mileage. Now you're rotating your mileage. I got a nice car that I lease for 12,000 miles a year. And then I got this other paid off car that I might drive that for 12, 15,000 miles a year. And I got my nice car and I got my mileage car and I got one car payment. So either a high mileage lease or that. For short-term people. If you're a long-term person, Deshone, I keep my cars 8 years. Then just buy a nice car, put 20, 30,000 miles on it, keep it 8 years, and then replace it. But if you are getting loans and you're not keeping these cars, high mileage drivers, y'all got to change your strategy. You're losing so much money. You taught me huge how to get multiple online quotes, but room and driveway, and some are gone now. Yes, room's gone. I haven't gotten the reports that driveway is gone yet, but I wouldn't be, if they have a similar model, they'll be gone too. You know, unfortunately, if they're operating under the same model that room operated with, they'll be gone too. You know, these people are paying more for cars than dealers pay, and they're reselling them. They're trying to, that's why I always tell y'all in the book, you notice we always have these guys when we shop, this is who we sell our cars to. We don't buy from them until we verify that their price is good, because most of the time they're going to be higher priced. Why? They're paying more for cars than other people. So if Vroom and CarMax and Carvana are paying more to buy cars than dealers and other people, then what's going to happen when they go to sell them? Where are those prices going to be? Higher than most people, right? So that's a hard business model to sustain. So we don't know what's going to happen to these companies, but as of now, we are certainly selling our cars to them. And every time we go to buy, we're looking at their inventory if we're buying a used car every time. What do you think about lease and buy? I don't, Sam, because we're mixing two. That's a great question. Who's had that question come into their mind? Lease to buy or lease to own? Who's heard that? I see somebody asking about branded title. We'll get to that because that's a simple thing. We kind of pass on those. They're like foreclosures, you know. I wouldn't tell you don't buy them, but they are for professionals. And, you know, it's just like going to auctions. You know, there's certain levels of car buying where the majority of the public shouldn't go into it because it's not going to be good for the majority of people. in the long run, and buying branded titles and salvage titles, it could lead to more harm than good for the public. So I don't teach it. I don't recommend it. I think there's 80 other ways to find deals and get deals on the market and get below market deals. We get them every day. I got people in Cars from Home University, my video program. I got people all around the country. So I see deals every week. I know what people are paying. I know where the deals are. You don't have to get a branded title to get a deal. So let's talk about that lease to buy. We are mixing two, y'all. The benefits of purchasing, the benefits of buying. Thank you, Classy. The benefits of buying are you can pay off your car and you can have a car with no car payment. You can outlive your depreciation so that, you know, there's some of you who have 8, 9-year-old cars in your driveway. The car is worth about the same as it was a year ago. That means you outlived the depreciation curve. When your car is worth $7,000 and then a year later it's worth $6,500 if you sold it, that means you've outlived the depreciation. The hardest, most dramatic depreciation, it's behind you. That's the reward stage. That's the benefits of ownership, benefits of buying. I paid this car off, whether I paid cash or whether it's a loan, I've outlived the depreciation. Forget the paying off of the car. Sometimes we think we've won because we paid off the car. I want you to see that that's one win, but the big win is not in paying off the car. The big win is, when does this asset stop losing values so much every year? When does it go from losing 10% or losing 15% to losing 5% or 3%? That means I got to own it for a while before I get to that level of winning. Who's at that level? You got a car outside that you've had for 8 years, 9 years, 10 years. Type that level. Type that level. See, I want y'all to know, we're answering this question. Somebody asked, what about lease to buy? We're mixing the two. You're not going to get to that level. Paid off car, not losing value. I could give this to my son, my daughter, my spouse. I could just have it. I could donate it. That's where you want to get to on a purchase. Leasing, new car, great deal, $50,000 car. I'm paying pennies on the dollar to drive it. This is the life. I'm pulling up to a traffic light, looking at somebody in the same car. He says, yo, how much you paying? I say, I'm paying $550. He said, man, I'm paying $900. What happened? We got the same exact car. Something's wrong. You put money down? I didn't put any money down. I'm paying $550. You paying $900. Oh, I leased it. Yeah, I leased it for 3 years. Oh, you leased it, but I bought mine. Okay, brother. See you later. Enjoy. We in the same car. $300 more a month coming out your household because somebody taught you should be buying. And you're going to go trade that car in 3 years, 4 years, and do the whole thing over again. Leasing is, I drive a great car, a lot of car for my money, smooth, things are covered. Anything breaks, I'm good. I take it to the dealership. They fixed it. I'm under warranty, brand new car. I go and I do that again every 3 years. That's the benefit of leasing. So I just told y'all about the benefits of the purchase, getting to that level, paying off the car, getting to the stage where you're losing little value every year, and then the benefits of leasing over here. Now, what's the downfall of each? Downfall of the purchases, downfall of the leases, we always have a payment. So in order to have that type of comfort, that type of assurity, that type of experience, it costs. I can't pay off the car. Secondly, the downfall of purchasing is I have an old car. That's just it. I have an old car, no warranty. I'm on the hook for whatever goes wrong. I don't have the latest and greatest features. That's the downfall. So both have their pros and cons. Here's where we really lose when we mix those two. I'm gonna lease a car for 3 years, then I'm gonna turn around and I'm gonna purchase it, usually with a loan, for 5 or 6 years. Just so we know, most people who are buying their leases, you're doing 3 years on the lease, and then you buy it with a loan, 5 years or 6. That means you're paying on the same car for 8 or 9 years. No. Only time it makes sense is if you say, I'm gonna buy my lease, because all you're doing when you buy your lease is buying a used car. That's all it is. So your lease, to buy your lease, it better be a good deal. We always got to check before we buy our leases to even see if it's a good deal compared to other used cars. But if we verify it's a good deal, all it is we're buying a used car. And the worst part about it is we're not even excited about the car no more because we've been driving it for 3 years. At least when we go out now and we just buy a fresh used car, a fresh pre-owned car, it's still new to us, right? It's still, you still get that thrill like, man, got me a new car, upgraded. When you buy your lease, you don't even get that. You start a fresh 5 or 6 year loan, most people will, and you're not even excited because you've been in the car for 3 years. So you're probably going to trade out of it in 2 years. Here's the bad part though. If you buy your lease and then trade out of it in 2 years, but you had a 4-year loan, a 6-year loan, you still got 4 years of payments left. I used to experience this all the time, y'all. Everything I'm telling y'all came from my experience in the dealerships for 14 years, seeing people in horrible positions and asking them, how did you get in this position? What the heck happened? Somebody walked into the dealership with a 5-year-old car, and he's like, yeah, I had this car since it was new. I'm like, oh, okay, you want to trade it? Perfect. I go and I look at how much the car is worth. It might be worth 18. Then I call the bank and ask them how much they owe, and the bank says, oh, he owes 18. I'm like, how the heck could you owe 18 if you've already had this car for 5 years? That doesn't make sense, right? You would think if somebody bought a car brand new and they had it for 5 years, it would be paid off, right? Yes or yes, or almost paid off. But I would call the bank and they're like, yo, yeah, this person owes 18 grand. And I'm like, and then they tell me I leased it for 3 years and then I purchased it with a loan. So let's add that up, sir. If you leased it for 3 years and then how long is your loan? 6 years. Okay. Which is fine on a used car. There's nothing wrong with a 6-year loan on a used car, 5-year loan. But when you're buying your lease with a 6-year loan, you've already paid 3. So now 6 plus 3 is 9, which means that person comes in after 5 years of having that car and they want to trade it. They still have 3 years of payments left. It's the only way I've seen it happen. Because no smart person signs up for a 9-year loan. Nobody does. But when we buy our leases, we are just committing to years and years and years of payments on the same car. So you're much better off sticking to your lane, remembering the 8-year rule, y'all. Remember the 8-year rule. If I'm not keeping a car 8 years, you might not understand it yet. That doesn't matter. If I'm not keeping a car 8 years, I'm going to save thousands of dollars getting a great lease deal. If I'm not keeping my car 8 years, this next car you're buying, if you're not keeping it 8 years, you are going to pay thousands more by purchasing a new car. Now, some of you might say, Deshone, I'm gonna buy a used car. You are going to pay about the same money as a person who leases. About the same money. I've done the math. If anybody's been to my masterclass, you know I spent about 20 minutes on this showing y'all video, showing y'all side-by-side comparisons about how leasing and buying a used car over a 6-year period, you spend about the same amount of money, except the person leasing drives a brand new car every 3 years, and the person who's purchasing the used car is driving a 6 or 9-year-old car by the time it's paid off. So it's just I don't want to say trust me because I like to show y'all. But if you don't understand the 8-year rule yet, then your goal should be, man, I got to learn more about that 8-year rule because it sounds like Deshone is pretty convicted that if you're, you just can't compare. A person who's getting these lease deals that I'm teaching them to get, you can't compare what it costs to buy those same cars. What do you do after 8 years? Well, no, you decide, Katie, whatever your next car you're going to get, you ask yourself, am I buying this car to keep more than 8 years, or am I going to keep it less than 8 years? If your answer is less than 8 years, then your next car should be a lease. You should be shopping for an aggressive lease deal. If you say more than 8 years, then you can buy. You should not lease. You're going to lose by leasing. Long-term people lose by leasing. Short-term people lose by buying. All in the book. You can go to deshonsbook.com, get my new book, digital book. It's called Car Shopping for People That Hate Car Shopping. Everything we've talked about in this broadcast so far, everything we will talk about is in there. All my strategies for shopping are in there step by step, and you can get yours for our book release. It's 75% off for, I think, 30 minutes. While you're watching, go to my TikTok bio, go to my Instagram bio, click that link, and then click the one that says 75% off. Download your book so you don't have to remember any of this. You don't have to remember. You'll have a strategy guide, a reference guide to help you. And just so you know, my book is broken down into 7 steps. It's not something you read and then you go implement. It's something you do each step. By the time you get to step 7 is delivery. So you shouldn't even be reading step 7 in my book if you ain't getting ready to have the dealer deliver the car to you, or you ain't getting ready to go take delivery. So I say the same thing in my video library. People, we got the same thing. When you get to day 7, I'm congratulating you on a job well done. Step 7 is we're at the finish line. Let's get our paper. Step 6 is paperwork. So step 7 is here we go. You did it. So you should not be at step 7 if you have not. It's not a book you read it and then say, all right, it's time to take a test. No, it's an action guide, step by step. So you can scan the QR code on the screen, or you can go to my TikTok or Instagram bio, click the link to get your copy, or you could go to deshonsbook.com, all for 75% off. Okay, how do you feel about electric vehicles? Great question. Great question. Electric vehicles, you just got to make sure you're getting a good one. Same thing with gas vehicles. As long as you are ready for the ownership of an electric vehicle, which means I need to know where I'm charging this thing. I need to know not gas mileage. I need to know battery capacity. How many miles can I drive? Make sure I'm not jammed up with that. But other than that, you need to check. We do a Google search on every vehicle, y'all. It takes 3 minutes to do. You type in the year, the make, and the model of the vehicle you are searching for. You type in, example, 2018 Chevrolet Equinox. You must type in the year because some of y'all know sometimes a good year, a car will come out in 2020 is a horrible one, but then they make the improvements in 2021 is a good one, right? We've seen that happen with cars. That's usually how it could happen. So usually you see a bad car has electric problems or something. The next year's version shouldn't have that problem if the manufacturer is, staying on top of the continual improvement. But you must check. We go to Google, we type in the year, the make, the model, and then we type reliability. 3 terms you want to remember, y'all. 2 are for leases, and 2 are for 2 terms for leases: initial quality and reliability. Initial quality is what are people saying about the car the first 90 days. When you lease a car, it's brand new, or it's almost brand new. Maybe it's a demo, a couple thousand miles, but it's pretty, let's say, brand new. Initial quality tells you what owners are saying about the car the first 90 days it's out. Reliability is telling you what are owners saying the first 3 years. That's very important. Those are the 2 things you check if you're leasing. And we type in the year, to make, the model, reliability. Year, to make, the model, initial quality. And you skim those reports on Google. You skim those first couple pages, look at those articles, and see if you see any red flags. Electrical problems, software issues, cars always in the shop, owners complaining. You want to look at that stuff. Now, if you're purchasing a new car, or if you're buying a pre-owned car, you're a long-term person. Remember, we're trying to get to that level. We're trying to get to that level. Paid off car, depreciation cooled off 8, 9, 10 years. I kept it. You need to look at initial quality if you're buying new. Initial quality, remember, is the first 90 days. If you are buying pre-owned, then initial quality doesn't really matter because you're buying it 2, 3, 4 years, 5 years old. What's important to you is reliability and then longevity. Longevity articles are going to talk about things like the engine, the transmission, long-term issues, owners that have the car long-term, what are they saying about it? You take the 3 to 5 minutes this takes, you'll prevent yourself from buying a bad car. Because the worst thing I could do is help you get a great deal on a bad car. Well, one of the worst things is help you get a good deal, a great deal, and then you should have been leasing, but you bought. Don't matter. You overpay. You're gonna spend thousands more. So anyway, those are the two things that when you talk about electric vehicles, the key is I got to make sure I'm getting a good one. First is be ready for an electric vehicle. It's a lifestyle change. Second thing is I need to make sure I'm getting a good one because some of these electric vehicles are crap. Oh, Marshall said, I got the book. So far, I am impressed and happy. Thank you, Marshall. I appreciate you. This is the name of the game. And look, let me show y'all something. You can't see it on TikTok, but I'll tell you all about it. The book, before we officially released it and started our promotion, we already, through the copies we had distributed, we already were rated 4.94 on Goodreads.com. We got 27 reviews, 31 ratings, 29 are 5 stars. So we already had people saying great things about it, using it, saving money with it. This isn't a book you read, it's a book you use. So get your copy for 75% off. Thank you, Marshall. Glad you are enjoying it. All right, let's get back to some more questions. Purchased the book last night. Thank you, Lee. Appreciate it. Enjoy it, use it. And please make sure you are emailing me with your success stories. All right, I'm due to trade in my Tacoma lease January 2025. Where can I find your information to get the best deal on my next lease? Okay, Pinhead, good question. Let me put that up on the screen. So there's stages. Remember what I said, steps, okay? No matter where you are in the process, everyone on here is going to fall in these 7 steps. First step is always, I call it the most important question. How many years are you going to keep the car? Now, in your case, you've already said my next car is a lease, which means I can skip that step. I'm leasing again. So now we go to step 2. Step 2 is the equity assessment. We need to find out where we are with our current vehicle. If that vehicle you're in has no equity in it, great. We know how we can proceed. If that vehicle has $3,000 of equity in it, well, great. We know that we can cash that equity out, put it in our pocket. We can account for it in our budgeting when we move to step 3, but it's our money. See, so we can't go to the shopping for our next car. Let me tell y'all what these 7 steps are. Whether it's in Cars from Home University, the video library, or whether it's in Car Shopping for People That Hate Car Shopping, the book. The 7 steps are the same. First step is the most important question, buying versus leasing, because it's the foundation of the deal. Like I said, if I could help you save money on a car all day long, if you should have leased this car, you're going to end up paying thousands more than you could have. So that's the foundation. Second step is the equity assessment. That means we look at our current car, our current lease, what we're driving, what we're replacing, and we need to make sure we need to account for that. We need to account for what's the maximum this thing is worth to me. Some of you find out you have negative equity. That affects your next step moving forward. So the reason we assess what we have in our current car is because it affects what we're going to do moving forward. You might be 10,000 miles over on your lease mileage. If you're 10,000 miles over for your lease, you're now operating with baggage. We still need to see if we can sell it, because some of you can sell your lease even when you're over miles, and that might help you to avoid a mileage penalty. That's step 2. Step 3, we move into deal-focused budgeting, structuring our deals. Now we're putting everything together. We're buying, we're getting our pre-approval. We're doing our if we're paying cash, we're accounting for how much is a deal. How much do we want to spend? If you don't know how much you want to spend, I'm helping you. I'm going to show y'all this in a future broadcast. I created something called the Perfect Budget Calculator. It's incredible. It tells you exactly how much you can spend based on the payment you want to be at. It takes into account the taxes, because how many times, who'll be honest, Who'll be honest and say, you went in, you looked at a car, you knew how much you wanted to spend, but you forgot about the taxes or you forgot about the fees, and that put you higher than you wanted to spend, or that put you higher than your budget? Who'll be honest? You got to take into account fees, taxes, and that's what the perfect budget calculator does. I see you. Thank you. Thank you to everybody being honest. This is how we win and move forward, when we're willing to say, okay, yeah, I see that. That's why that happened. Okay, I did that a little incorrectly. We're not going to do that. We're not going to do it like that no more. And I create these tools and these systems to counteract these common mistakes that we've been taught to make. So the perfect budget calculator, that's what we're doing. We're coming up with now, I'm budgeting for a deal. I'm not budgeting saying how much I can spend. I'm budgeting for, this is how much a deal. I could spend $800 a month. Don't mean I'm gonna spend it all. You know what I'm saying? So you got to be able to budget for a deal. And then, and then we move into verifying, shopping, and picking our car. Picking our car. These things may move quick, but they have to be in order. See, because many of you, the reason why you haven't saved all the money you could save on your car deals, it's not just because you didn't know this. It's because even when you try, you're doing things in an order that doesn't work well. It's like, I know how to bake a cake, but I put the daggone frosting in the cake mix. No, the frosting doesn't go in the cake mix. You bake the cake and then you put the frosting on it. So, some people say, oh, I deal with my trade-in later. No, I find my car and then I deal with my trade-in. Here's why we don't do that. Because when you find your car, you go through all this trouble. Now you find a car and they'll tell you, who's heard this? Don't tell them about your trade until the end. Who's heard that? Who's heard that? Raise your hand if you've heard. Don't tell them about your trade until the end. Let me tell you how that's a bad order of steps. Because I'm going to go through all of this trouble, find a car that I like, negotiate the old way, because that's what people are doing. They're not getting bids. They in there going back and forth. You going back and forth, back and forth. And now you're like, all right, I like that price. Boom. Now let me tell you about this car that I want to trade. How much you going to give me for that? And if you could give me what I want for that, now we got a deal. So now you need me to give you some number that you pulled out that might be a real number, or it might be based on some just number you want. So now what happened if I can't give you all the money that you need to get for your car? You just wasted your time. We gonna part? Hey, all right, listen, sorry it couldn't work. You just wasted your time. One thing y'all gonna learn about me, two things that I don't want to waste any of: my money or my time. Anybody who agrees with me, hit the like button. I care just as much about my time as I do my money. So what y'all gonna find using what I teach y'all is you ain't never gotta walk away from a deal. You ain't never gotta walk away. We're not giving a person an opportunity to waste our time. It is out the way, yeah. We're not giving, and Lucille Ball's on the other side. We're not giving a person an opportunity to waste our time. So what you want to do, Pinhead, is you need to assess if you have equity. That's your next step. You've already decided you're leasing. Good for you for making a decision, knowing you're a short-term person. Now what you're going to do is you're going to call. You're going to go online to those websites I mentioned earlier who buy our cars. When you go on their website, when you get to the section where it says, is the vehicle leased, owned, financed, you want to put owned. The reason is because 2 years ago, they set their websites up in a way because the bank started creating these third-party restrictions where Carvana and CarMax couldn't buy the cars directly. And so they had all these people who are going through their websites and they couldn't sell the cars to them. They couldn't buy their cars. So what they did is they just programmed the website to automatically, when it says lease, we can't buy leases. But what is truly the case, and I can tell you, I can attest to this because I have people in Cars from Home University who sell their leases to these companies. If you don't have a third-party restriction, you can sell to anyone you want. And not every lease has a third-party restriction. So now, if you have a third-party restriction, you can still sell. It just limits who you can sell to. We sell. God, we done help all types of people get third-party. That don't matter. It's just we have to sell to a local dealership. So if I had a BMW and BMW has a third-party restriction, I'm going to sell to a BMW dealership locally. And I teach you in the book how to have a conversation with a used car manager, get multiple bids, and sell to the highest BMW dealership. That's all you do with a third-party restriction, unless they're super lowballing you, and then you buy the car and you resell it to somebody like Carvana or Driveway or CarMax. But that's how we cash out our equity, because when you sell direct to these dealerships, you avoid the taxes, and sometimes the dealer the dealer payoff is lower than your payoff. So third-party restriction or not, it's all in the book. It all be taught. But that is your next step, Pinhead. You have to assess your equity, find out what's up with the Tacoma. And as long as you're doing it, if you got a year left on your lease, I would be doing that at a year. I would assess my equity when I had a year left, and then I do it every 3 months. So I do it again at 9 months. I see what the offers are, see what my payoff is. And then as I get closer to my lease ending, I do it again at 6 months, because I need to know if I can make money, or I need to know if I could get out clean. Some of you are going to find out, man, I got 3 months left. I could break even and get out clean. You normally can't get out of a lease contract. You can't get out of a contract. I contracted to keep this car until June 2020, whatever. If I could break even by selling it, I avoid any mileage penalties. The rest of my payments get paid off, and I can just go and get a car now. So that's why the equity assessment is step 2. We don't even worry about the car we're looking for until we've assessed our equity. We got to maximize the value for our current asset. Whatever you're driving now, whatever you're replacing now, you have to maximize the value in that, and then you move on to the next step. Yes, it's an ebook. The reason it's an ebook is because it's links inside, it's links to videos, it's links to documents where you have my scripts that you're going to be using on the websites, and I can update it. I've updated that book probably 3 times, maybe even more in small ways, but probably 3 major updates. I couldn't do that if it was printed. As things change, look, Vroom's out of business. If I had, 1 million books in print, I can't just update 1 million books. Vroom's out of business. No, but in a digital book, I go on, me and my team, this is the new file, boom. We keep it fresh. We keep it relevant. Yes. So most brands have third-party restrictions. How do you know? There's 42 brands. How do you know? There's even more leasing companies. Jeep has 4 leasing companies they use. I mean, and I'm not saying it's not true. You know what I'm saying? You might be right. I'm just asking you, how do you know? Because sometimes we make statements like, that's what I like to know. If your brand has a third-party restriction, no, we make our money. If it has equity, we're going to get our money. Doesn't matter. Third-party restrictions kept a lot of people from their equity. They said, oh, I knew it was too good to be true. I'm going to just go into the dealership because I was going to sell the CarMax, or I was going to sell to this dealership, but, I got third party. And they went right into the dealership and said, look, Charlie, stop playing. I know I got equity in this thing. And then you're sitting there letting Charlie work your deal when you should have been sitting at home, getting bids from local used car managers and selling and getting all your equity. Looking to purchase, any thoughts? I'll buy the book. Benz GLA or BMW X3. How many years are you keeping the car, Rob? How many years are you keeping the car? How many years you keeping the car, Rob, that you're buying for your wife? All right. Rob said Benz. And are you going to buy it or are you going to lease it, Rob? You're going to buy it or you're going to lease it? Did you just tune in? How long you been on here? How many minutes have you been on here, Rob? How many minutes have you been on here? Because I just asked Rob, and y'all know what we've been talking about. If you've been on here with us for the last, shout out to, I see y'all liking, blowing up the likes on TikTok. Oh, just joined about 5 minutes ago. All right, you get a pass. Because what we've been talking about, part of what we were talking about is the rules for buying and leasing. So what you're gonna find, what you're gonna find, the vehicles you just named that you said you're considering for your wife are brand new in the mid 40s. Let's call them 45,000. A GLA, well, you said a GLA? A GLA is not comparable to an X3. A GLA is comparable more to an X1. Now, although the GLA did get redesigned, so it's a little bigger, but what you're going to find is they're in different. So the GLA is probably going to be like 40, 41, whereas the X3 is probably going to be 45, depending on how you build it out. Now, let's just say, though, for example, they're both 40. Just for example, to purchase those vehicles for $40,000, you're talking about $800 a month. If you take a 6-year loan, you're talking about $700 a month. You could say, oh, Deshone, I'm gonna put money down. Forget the money down. The money down is what confuses you. You start to, you get lost in the payment and the structuring of the down payment and all of that. Let's focus on the price. Let's focus on what you're committing to. What's the price of the car? $40,000. That's coming out of your household in 4 years, 5 years, 6 years, plus interest. You're gonna give us this whole $40,000. Whereas a person who's leasing is paying pennies compared to that. And if you're not leasing, those same cars that you would be paying $800 a month for, people are leasing them for $500. And this is the part where you can't, there's not, look, if you pull up to a traffic light, I'm gonna ask anybody on here, if you pull up to a traffic light and you are driving a car and you look to the side of you and somebody pulls up in the exact same car, like identical, and you happen to ask them, what are they paying every month? And they say $800. If you're paying for the same car, neither one of you put money down, $500, who's winning right now? Who's winning? Same exact car. I'm telling you all that is what is happening with people who get great lease deals. This person that I just showed y'all, let me show y'all this person now. Let me show y'all Greg. Greg got his lease. Look at the date. Greg got his $56,000 Kia electric. He's paying $527. That's a $56,000 car. Y'all can't see it on TikTok, but I'm just breaking it down for y'all. It's no comparison. A person who bought that same vehicle he's driving, $56,000, they're paying $1,100 a month. There are people who own this same vehicle paying $1,000 a month. Y'all know the rule. Every $5,000 is $100 a month. And you see how you can understand it when I don't talk about these down payments. See, when you're not putting money into the deals, you can compare the deals. That's how they get, that's another way they get y'all, oh, how much you put down. Now you confused, you looking at the payment. We don't put any money in the deals when we're comparing. Now we can clearly see, wait, this one, no money down, $527 a month. He leased it. This one, he's purchasing it, no money down, $1,000 a month on a 6-year loan. What the heck? This is no comparison. In the short term, I want $500 coming out my house, not $1,000. A lot of people who got in trouble paying $1,000 car payment wish there was a way that they could have been paying $500 or $600. But because they were taught never lease cars, they're never gonna. They've lost deals like this. Now that's a 1% deal Greg got. You don't really see a lot of those. It takes a lot of rebates. It takes a good lease program, and it takes him competitively shopping. That's what we do. I teach you how to make dealers bid. So we're never going to, no one who you ever see me show you has ever gotten less than 5 offers, because 80% of dealers are overpriced. So when we go with a dealer, it's because they won the bid. That's how we guarantee, and that's how you're going to guarantee. When you look at 5, 6 offers, you're going to be able to say, Dad, for the first time in my life, I'm confident in this price that I'm accepting. Because none of you are able to be confident because you're not seeing enough offers. You just kind of hope you did okay. But yeah, that's the type of stuff that if you purchase when you should have leased, it's too much money to catch up. You've lost too badly. All right, so let's get back here. This is all in the book. Everybody who wants to get their copy, it is 75% off for 30 minutes. Click the link. And if it's not showing the 75% off, let me know, but it should be. You could go to my TikTok bio, get your copy, my new digital book, Car Shopping for People That Hate Car Shopping. And you can download it immediately. You can be using it in literally 3 minutes. It'll be in your inbox. And you can put these strategies to work. All right. Instagram bio, TikTok bio, or Instagram bio, TikTok bio, or you could go to deshonebook.com or scan the QR code. So what else we got? We still got hundreds of people on here between all the platforms. Shout out to y'all for checking in, tuning in, and making sure you are fighting to protect your money. EV cars are a waste. See, we don't pay attention. Here's what I don't want y'all to pay attention to. People who sound like they've been burned, whatever, because you're not saying anything of value. You sound just like the people who say never lease a car. You don't realize how ridiculous to somebody you look. You made yourself look ridiculous because you're ranting. You need to give reasons, and you need to give compelling reasons. And the best thing for you to do is to give compelling reasons backed by data, and then we'll listen. But you just sound like somebody who had a bad experience with an electric car, and you probably bought a bad one. We're not negating your experience. You probably bought one that was a problem. You may have didn't check your longevity. You probably didn't check the initial quality. You probably didn't check the reliability ratings, and you ended up with a problem car. It could have happened, but that's no reason. That doesn't give any. You don't now get a pass to go and tell people. Like people who say, oh, never buy a Benz. Never buy a Benz. I know you. I've seen you. You had a Benz in your life before? Yeah, I had one. It was the worst ever. Okay, let me ask you. You bought a used one, right? Yep, I bought it used. Did you have one with a warranty? Well, it had a year warranty. Did you buy an extended warranty? Nah. I didn't want to buy an extended warranty. Stuff started going. So you telling me you bought an old Benz because it was in your budget, but it really wasn't in your budget because you can't afford the maintenance. You couldn't afford to buy a quality one with a long warranty to protect yourself. You knew this is a car where things go wrong, and when they go wrong, it's expensive. It's expensive to fix, but you didn't get a quality one. You got a bad one because you wanted to be cheap, and that's why you hated the experience with Benz, BMW. Car was always in the shop. Understandable. Those people, they're out here, y'all. They're out here. That's why you got to be, you're going to have your own independent system for how you car shop and how you make decisions. And it's independent of a person's opinion. Thanks, Lindsay. I got your book. I want to learn how to lease a Mercedes GLE. Easy. Now, what you're going to learn, Lindsay, is lease programs are not always good. Every single car, let's say there's 500 different cars, 500 different lease programs. Sometimes the trim levels are different on lease programs. So literally, the sport model has a different lease program than the limited. What you're going to use in the book, it's going to show you how to connect with 25 dealers. You're going to get at least 5 offers. You're going to do this right from home using your computer, using my scripts. In my scripts, you type. You don't say them. You're not talking to anyone. You're typing them in email, right? Once you get 5 offers, if they're all over 1.5%, which you'll see in the book, I'll walk you through how to analyze the offers. I have a tool in there you're going to use. You're going to put your offers in. It's going to tell you what to counter, because we counter offer by email. But once we see all the offers are above 1.5%, they're like 1.6, 1.7, 1.8, 1.9. That's a bad lease program. That means the manufacturer, the bank, is to blame, because the dealer who wins that bid is going to be giving you a large discount. That's why I say it's a lot harder to get a great lease deal. It's a lot easier to get a great purchase deal on a new car. Because with our system, we're going to have a dealer who blows everyone else away. They're going to beat everyone else. But if now we say we're going to lease it, now all they can do is put that price that they've agreed to into the computer in the lease program, and then it's going to spit out a payment. If the lease program is bad, there's no rebates, the residual's bad. We don't worry about all of this. You can't control any of this. All you could do is shop and then look at the results. We don't get into money factors and the interest rate. That we can't change that. All we can do is shop, look at the offers, and then judge accordingly. Now, when you see that, if they're all under 1.5%, good lease program. Now you're just picking which one is the best offer. If they're all over 1.5%, bad lease program. And how they're winning with those is they got financially egotistical people who want to drive the car and they don't understand financing. Give you an example of that. Range Rover. Hey, come on, Mr. Johnson. You know how long you've been driving Range Rovers? And about 10 years now. Come on. You know, but I used to pay $1,200. Now y'all telling me it's $1,500. You know, the same car. You know, I can't see any. But he gonna come in. He gonna get that car because he needs to pull up in a Range Rover. He's not gonna buy $100,000 car and pay, $1,800 a month, $2,000 a month. So he has to lease it, but he's overpaying for his lease. There's no value in it, because when it's all said and done over 3 years, when he looks at how much he paid for that Range Rover he's giving back, it's a ridiculous move. You paid 60%, 70% of the car's value, and now you're giving them the rest back, and they're going to go sell it. So we got to know when when banks are trying to take a shot at us. And I always say, if you leasing, you don't love any car anyway. If you wanted a Range Rover this time, you're going to learn. Have 2 backup, have 3 options. We have 3 options. And whoever has the best lease program, that's who wins. I'll see you in 3 years, Range Rover. Maybe the lease program will be better. And then I'll lease a Range. But I'm not going to take no bad leasing program. And now I'm out here paying a ridiculous amount of money for a car I'm giving back. So we got to know bad lease programs. I teach you that in the book. That's above the 1.5% rule. So all of that is going to be broken down for you so that you know how to maximize your money. And it's going to be step by step for you. So I'm glad you got it. I'm looking forward to you using it. Made my purchase today, Jackie. You got a car? I am, because I leased the lease. How do you shop for the best lease? Robbie King, it's multiple offers. We use online shopping systems. What I'm teaching y'all is a system for shopping online, not just the cars from home. The way I teach, it's a system. It's like McDonald's. I say to you, trust me, use my system, get this result. It's the same thing I talk about in my videos. If you go watch all the videos that I have on my social media, every one of them fits into what I'm teaching. You'll be reading my book and you're like, yo, this is exactly what he's saying in his videos. If you in Cars from Home University with the video library, you watching the videos and you like, wow, this is exactly what he said on social media. It doesn't change. It's just, it's broken up. So when you look at, hold on one second. I wanted to put that comment up on the screen. We have all been burned. Oh, sorry. Good time. You checking in. Good to see you. Deshone, $97. No. It should be, $97 is the normal price. I'm going to reset it. Let me know if you see the 75% off price. Go to my TikTok bio or my Instagram bio. Let me know if y'all see the 75% off price. That's what it should be, 75% off. Or go to deshonsbook.com or scan the QR code and let me know. Let me come back here. Okay. Oh, thank you, Patricia. Enjoy it. Enjoy using it. There we go. Robbie. He said, how do you shop for the best lease? It's always multiple offers. Now, I'm gonna give y'all a quick way. Now, I don't recommend this, but if you don't have the book, then you could do this. One quote, you pick a car, you know, you get an offer and you get out of there. I don't get any offers in the dealership ever. You're better off leaving and then calling and getting an offer. And then you're going to call, at least you're going to call local dealerships, ask for a sales manager, speak to the sales manager and say, hey, my name is such and such. This is the car I'm looking for. I wanted to see if you guys had something like this. And if you had something that fits my choices, and if you could give me an offer. If you're dealing with a sales manager, you could work through that and you could probably get to a point where, they may want to, you could get it done. It's I can't predict it because now it's scripted. Now it's words. Now it's people with wording. And, the reason why it's predictable when we go online is because we're just typing. So when we're typing, I know when the dealer gets our request, when we send our request, we're telling them all the colors we want, black, white, or gray. That means when they look at the car, they're looking in their inventory, they're like, okay, black, white, or gray. Do we have anything? We're telling them sport or GT model. All right, black, white, or gray, sport or GT. We're telling them the equipment we want because we build the car. So you got to know what you want, and then you got to know what you're open to taking. Open to taking means I like the big sunroof. I don't need the big sunroof. I could do a regular sunroof. I could do the sunroof or I could do no sunroof. Doesn't matter. That's important because when the dealer looks in the inventory, he might see, oh, this car has everything they want, but it doesn't have a sunroof. You think they'll take it. Now they're trying to get in touch with you, find out if you'll take one without the sunroof. Meanwhile, somebody else go sell the car. Now it's over. So that's why when we come in with the request, shout out to y'all liking the running the likes up on TikTok. Could y'all please keep tapping the screen? Appreciate y'all. Try now. I just reset the link. So anybody who saw the 97, go back now and see if the 75% off is there. So we're letting them know that from the start when we come in. So they're looking and saying, okay, any of these options works for these people. Let me pull something so I can give them an offer. So that's how we come in the door. We do that by email. Now, if you can do it with the other way I just told you with the sales manager, but you need to be aware of it because you don't want to, you're going to come across as if you're wasting their time because you don't know what you want and you don't know what information to give them. Here's another thing that they must know. Once we know the car we want and we give that to the sales manager, we must tell them where we work, what our title is, if we're an attorney, if we're affiliated with any attorneys, sometimes there's rebates for this. And I have a template. This is all in the book. You fill this out. But if you don't have the book, then this is what you need to give in order to effectively be able to get an offer online. You can't even get one without this because a dealer can't give you an offer. You are now going to tell them what cars are in your household. If I have two cars, one of them is paid off, it's an Infiniti, one of them is Chevrolet, and I'm leasing it. Why? Because sometimes there's rebates depending on which cars you own. Sometimes there's rebates for a competitor's car. Sometimes it's rebates, loyalty for a same make car. We got to tell them if we're military or ex-military, because if they have a military discount or rebate, first responder discount or rebate, Costco discount or rebate, these are the things we have to tell. So a lot of you can't get your offers online. You can't shop online because you just don't know how to shop online the right way. When the dealers are saying, I can't give you a quote, I can't give you an offer because I need this information, and you're defensive, you don't realize, why are they asking for my zip code? Why are they asking me where I work at? So you're slowing the process down and you don't know it. So when you start using the way I teach, you're giving them all the information they need right there. Now you got everything you need. What's your offer? And when you do that and you get at least 5 offers, whether you're going to do it the manual way with a sales manager or whether you're going to do it my way in the book, that's the information you need. You get 5 offers. and you'll see how different the offers are. It's going to blow your mind. One offer will be $500 a month, another offer will be $600 a month, another offer will be $650 a month, and you're going to be like, whoa, how are these offers so different? Because 80% of dealers are trying to take your head off. 80% of dealers are going to be high, overpriced. Even when they discount and take off a little more, take off $50 more, $75 more per month, they still overpriced. But the 20% win the bid. Miles Weed. So Miles said, can we work with you directly? So I get results for people. Here's what I'm very good at. And if I couldn't do it, I wouldn't be doing it. I'm good at getting results for groups. I'm good at getting results for groups. I have been fortunate where God has blessed me to be able to connect with people and either help them through my free videos. Those who want to go deeper with me, you get the book, 75% off. I see people still saying it's showing the full price, so I'm going to try to reset it one more time. Or people who are in my video library, some people you'll hear about the video library where people just want to watch the step-by-step videos instead of reading the book. And then there's people who coach with me. But I don't coach with anybody who doesn't have those things, because now I'm just coming in and I'm talking to someone who doesn't know anything about what I teach. So once you know what I teach, I can coach you. I can't coach you from nothing. Like, you asking questions that I explain in different mediums everywhere, but I got to continue to say, no, that doesn't work. It's ineffective. So I coach groups. There's plenty of people who, right now I've coached 1,400 people since 2021, since November 2021 in Cars from Home University. So it's been great. Does this work for cars that are not high end? Absolutely. Every principle, this works for everything from the Honda Civic to the Bentley. Doesn't matter. Principles are the same. When I worked for General Motors, I saw people making the same mistakes when I went to Mercedes-Benz. Doesn't matter. Same mistakes people were making. Thank you. I see everybody sharing these gifts and everything. Thank you so much. The same mistakes I saw people making on Instagram. Can y'all see me? Hold on one second. I looked at Instagram and it was a blank screen. Can y'all see me on Instagram? Type a yes if y'all can see me. But yeah, the same things I saw people doing at General Motors is what I saw people doing when I went to Mercedes. Same mistakes, leasing versus buying mistakes, equity mistakes. It's the same. And if I was shopping for a Ferrari or shopping for a Chevy Cruze, I'm following the same system. See, that's the thing about a system. You could want a luxury car, you could want an import car, you could want an economy car. A system's going to get you there. Those 7 steps that are in my book are going to get you there. The 7 steps I teach all in my videos are going to get you there as long as you follow them. Because it's principles. Principles don't change, even when you switch the car. Just got the #1 gifter badge. Thank you, iPad Photo Girl. Appreciate you. Thank you so much. Lease for $3.99 a month. It doesn't matter if they still want you to come in photo booth. We don't come in until the deal's done. We don't come in until the deal's done. We are never coming into a deal. See, remember this, y'all. Whenever you walk into a dealership and the price hasn't been established, you're setting someone up to potentially waste your time. You are potentially wasting your own time. If there's a possibility I could leave here with no car, because of price, then I'm wasting my own time. Now, with a used car, pre-owned car, you're going to see what I teach is something called the multiple marketplace strategy. We cannot test drive a pre-owned car until the test drive is the final step, and then we take the car. With new cars and leases, we always test drive first, then we shop offers. With a used car, you can't do that, because you could go test drive a car and then that car is good, but the one you end up getting, if it's a different used car, it's going to drive different, could be feeling. So the final step of a used car purchase is always going to see the car and drive it. And all right, perfect. Feels great. You might get a mechanic to inspect it. I'm taking it. But we are never coming to see a new car or used car without pricing being established at home. Prices, fees, what I'm paying, is this a great deal? All established at home. By the time I get there for a used car, I'm only here to verify that everything is everything. I'm only here to drive it, buy it. I already made sure you was the best price. I already talked to you online. I had somebody write me the other day and say, yo, I'm here looking at this used car. How do I get them to get rid of these fees? You can't. You're there already. That's something you were supposed to do at home. That was something you were supposed to verify at home before you got in your car to drive over to that dealership. Because while you're there trying to get that dealership to take off those fees, the real best price car is gone. That thing done sold. While you there wasting your time with this car with $2,000 in fake fees, the real best deal is gone. So this is strategic. Everything we do is strategic. It's designed to save us money, make us money on our car, and not waste our time. Thanks for organizing and passing this out. And I've been watching your videos. Thank you so much. I appreciate it. This is what we do. This is the mission. I love this. I enjoy it. I love to see the community continuing to grow. Some of you on TikTok know I used to go live back when I first came to TikTok. I went live very regularly. We did a lot of Q&A. But what happened is we started developing these programs in this educational material to get in the public's hands. And so we took a back, promoting that, going live took a back seat. And we wanted to make sure that the people who we were helping were getting results, wanted to make sure that people were saving the money. But now that we did that, we spent the last 2 years doing that. Now I get to go live again and do these shows and interact with you guys and get this information to you. So does the book break down how to purchase after bankruptcy discharge? Good question, Natasha. So yes, there's strategies in there for bad credit, for rebuilding credit, for low credit. Here's what you got to know about that. Here's what anybody on here who has less than perfect credit, any of those three things, what you should be doing is you got to take credit. Like you got to take rebuilding your credit to get a car like you would do for a house. I've seen tons of people, and you've probably seen them too. When they get ready to buy a house, they locked in. They're working with credit people. They are literally like, man, I got to get to a whatever, 620, 640, 5.8, whatever they're trying to get to, they focus. You should be taking, unless you're in an emergency, you should be doing the same thing with a car, because when you get to that 660 range, you got a lot more options than when you're 605. You got more control. So what you're going to see in the book is I have plan A, plan B, plan C for bad credit. And what happened? What makes a plan C versus a plan A? What situation you're in? We're going to try plan A first. Plan A gives us the most control, which is the most options, the most flexibility, the most freedom. What is freedom? That means I can buy a car wherever I want. That means there's no special network that y'all set up to sell me a car. Sometimes there is. With restricted pre-approvals is what I call them. We approve you, but you can only shop here. We approve you at Carvana, but you can only shop with us, Carvana. So wait, what if all your cars are overpriced? I said what I said. You can only shop with us. That's a restricted pre-approval. So it does me no good to have a company pre-approve me and then point me in a direction of where I can shop. So that means when I look at this car, if I know that a car like this I could get for 18, why y'all want 22? What if, can I just go find this other one for 18 and then y'all just fund that? Nah, you got to go through one of them. See, so that's lit. The less control you have over your financing, the less control you have over what car you can pick, the less control you have over identifying a great car at a great price. You could find a great car at a great price. If you have great credit, we're going to snatch it. I'll help you find it, lead you to it. Nothing's going to stop us from getting it. With bad credit, you can find a great car, be literally right there, go to the funding source, depending on who you got your loan from, and say, I found a great car. And they say, nah, that don't work for us. So that's why we got to have plan A, plan B, plan C. And what I'm telling you is rebuild your credit. Get yourself to that mid sixes, 660, 670, so that you could be out of that manipulation zone where you really have limited control. But no matter who you are, in the book, there is a plan for you. And there's a plan A, plan B, plan C. Because no matter where you are in the spectrum, you never want to get to the point where you forget that I need to be moving with strategy. Dad, I don't care if you end up buying from buy here, pay here. My first car when I was 21, my second car, actually, my first car was a $500 Mitsubishi Eclipse. Transmission went out. Nice car, though. And it was a 1997, I think. And then my next car, I got from a buy here, pay here place. I literally went down the street. I want to say I put $1,500 down. I paid them $50 every week. I was 20. I was 20 years old, needed a car for work. And I paid it off. Do you know I kept that car for 6 years? Kept that car for 6 years. So even if, and I didn't know anything about cars back then. I wasn't in the car business. I was 20 years old. But one thing I can say is what did I do right is I made sure I got a good car. Car had, I think, 70,000 miles on it when I bought it, or 80. It was a good car. So even if you are in the non-traditional route to acquire a vehicle, there's things you don't want to skip, or you don't want to be in there blind. Oh, I just want a car. Now I'm leaving with something with 120,000 miles. It's overpriced, and now I'm in trouble and I'm paying. So no matter how much you have, no matter what position you end up going, whether you're following my book, whether you're plan A, plan B, plan C with bad credit, each of them is a plan. We never wing it anymore. All right, do you have a 660? Do you have to have a 660 across all three bureaus? And it's not just score, it's just what I see is when you get to that 660, 670 range, when they see 640, 630, it's just a manipulation zone. It's just a zone where you might qualify for some good things, depends on your profile, or you might qualify for almost nothing. Like it's this gray area that's very hard. So I like to tell people, get out of the gray area. Like get out of the gray area, get to 670. Like get there. But again, it's not all credit score. It's profile. You could be a 660 and you have 3 car loans, or you even have one. You got 1 car loan. You've been paying it for 2 years, every day, every month on time. You in a good position. You're in a good position. Or somebody else could be a 660 and they missed 3 car payments. You're in a better position than them. That's profile. Shout out to everybody else, who's been really sharing. New people. If this is your first time seeing me, could you type a 1? Could you type a 1? I just like to know how many new people we get on here. I always like to welcome the new people. And could y'all do me a favor, everybody? If you've been here, you've been with me before, could y'all just type welcome to the new people? Let's type welcome to the new people. We invite y'all to subscribe, to follow. This is a great community over here. This is a community of people who are very much into financial literacy and to making sure they watch their money, to making sure that they're not giving away any of their money that is rightfully theirs. So that's the type of community that we have here. So definitely shout out to all the new people and shout out to the people who are welcoming the new people. So that's it, y'all. 75% off my new book, Car Shopping for People That Hate Car Shopping. 7 Steps to Saving Time, Money, and Avoiding Dealerships. 75% off. You can get it in my TikTok bio. Click the picture of me. Go to my TikTok bio. Click that website, or my Instagram bio, and click the one that says 75% off. Or go to deshonsbook.com or scan the QR code. Any of those ways, you could get your book for 75% off. Download it immediately. Start using it. All your questions will be answered in that book because I've accounted for everything in there. No matter what your position is, you're going to follow those 7 steps. All right. Is there any option with high mileage leases other than buying the car at the end of the lease? We don't buy cars at the end of the lease, especially a high mileage. Think about the high mileage driver I told y'all earlier, right? He came in with 75,000 miles on his car after 3 years. He wouldn't buy that. It would be financially, no. We don't buy our leases. Like, we just don't buy our leases. Like, you could assume, as long as y'all know me, if I'm asking Deshone, should I buy my lease? 99 times out of 100, he's going to say no. But here's what I'm going to ask you. Are you buying your lease is like buying a used car? That's all it is. Do not look at it any different. If you're buying a used car, I'm going to ask you, are you keeping it more than 8 years? If you say yes, then great. Buy it, get to that low depreciation phase, and you won. If you tell me I'm buying a used car and I'm not keeping it 8 years, then I'm going to tell you you're about to lose. You should be leasing. So it's the same way with buying your current lease out. If you buy your lease, all you're doing is buying a used car. That's it. The only difference is instead of going out looking for a used car, you got one right here. That's the only difference. So I'm never going to recommend buying a lease unless you tell me I'm keeping it 8 years. Because someone who gets a great lease is going to pay less than you. That same car you about to buy your lease out, if I go get a great lease deal on that car, I'm going to pay less than you. And I'm going to drive a better car than you. That's called value. There's nothing to debate about two people who are driving the same car, and one person is paying much less than them. What do you know that I didn't know? I'm paying $350 for my Infiniti car. You're paying $550. We driving the same car. Buddy, it's something I know that you don't know. Did you put money down? No money down. Did you? No, I didn't put money down. How you get $350? I'm asking you how you get $550. How you pay that much? That's the difference between knowing how to get great deals and not knowing how to get great deals. But the difference between leasing and purchasing is the most important, y'all. If it's one subject that you need to zero in on with me, it's leasing versus purchasing, because that's foundation to your car deals. And that's what you got 99,000 other people out here trying to beat into your head. Don't lease, but you're never going to see them talk numbers. You're never going to see them show you a number like, look at Taupe. Look at Taupe on the screen, y'all. BMW lease. Look at Taupe. Now, just to show you the dramatic difference between leasing, getting great lease deals, and purchasing, I have to continually show you the people who I teach, who learn from me, who get great lease deals. I got to continually show you to compare so we got to hammer this thing in. Now watch this. Taupe, let me hide this question. Taupe got a 50, how much is her BMW? $54,000, $54,750. She drove off at $690 a month. You can see it here on the screen. If you're on TikTok, I want you'll catch the rebroadcast, we're going to syndicate these shows because these shows, I believe, are timeless. And I think no matter when you're watching them, you can get value out of them. But if you're watching, you go watch on YouTube, you watch on Facebook, go watch the replay, you'll see she's paying $690 for a $54,000 vehicle. That's an $1,100 a month payment. Remember the rule, every $5,000 is $100 a month. 54,000, that's $1,100, not taking into account taxes, nothing. How do we compare that? Do we see the drastic difference? For years, they taught y'all that people who lease were somehow stupid. They taught y'all that people who leased were financially unwise. It's them. It's them that's actually operating in ignorance. It's them who's looking at their family, because you might buy a car and keep it until the wheels fall off, but your son isn't. Your daughter isn't. Your wife isn't. Your husband isn't. So you telling them, they like, Dad, well, I've really been hearing about leasing because, I'm not going to keep my car as long as you. I might only keep my car for like 4 years, 5 years. Then I'm going to switch it. Don't matter, son. Go buy it. Find it horrible. You don't realize because your son listens to you, you just cost your son $2,000 or $3,000. Now, somebody like Tope, she's experienced it. First lease, I got a lot of people, many of you, your first lease is going to be because of me. And I'm fine with that. I know that's part of the mission. We've had hundreds of people. Man, I knew nothing about leasing until I started digging in and learning from you. So now once we experience it, Tope is driving a $54,000 BMW for $690 a month. Now, $690 a month normally, if she purchased, that only gets her $35,000 on a loan. So the same car that she would go look and buy for $35,000 would be the same $690 that she's paying for a brand new BMW. This is what we get to do. See, I never feel like we're at a loss. I feel like we are so blessed that we get to bring this information to the world, and whoever receives it, God bless you, you win. Whoever doesn't receive it, you lose. And you can lose without knowing you're losing. That's pride. Like, if you really look at this and you slice this up and say, man, look at Greg's deal. Look at Greg's deal. Look at Tope's deal. Look at Danielle's deal. Look at Danielle on her Audi lease. This ain't just luxury cars. Showed you a Kia. This is when you find a vehicle that has a great lease deal, you get multiple offers like I teach. You get the dealer that wins the bid like I teach. Look, $44,000 Audi, Danielle's driving, $550 a month. That same car, $44,000, would be about $800 a month. No, $900, because you got 44, that's closer to 45. I'm good with math, so I'll tell y'all what it is. 45,000, every 5,000 is $100. That's a $900 payment. There are people driving that same car now, no money down, went and picked it up, $900 a month for 5 years. They might say, man, that payment a little high. What about a 6-year loan? All right, we can get you to $800 a month. That's still high. What about 7-year loan? See, this is what happens when you're trying to force a purchase and you can't afford a vehicle. 7-year loan. All right, if you do 7 years, we can get you to $720 a month. All right, I think I'll do that. $720. You leaving out of there with a daggone $720 payment for 7 years on an Audi that Danielle is paying $550 a month for. So this is in the book. In the book, anybody who wants to clearly be able to see the leasing versus purchase money comparison, in the book, I link you to a video in the Cars from Home library where I compare a new car lease to a new car purchase, a new car lease to a used car purchase, and a new car lease for a high mileage driver versus a high mileage driver who purchases. So we go deep on that, and I show you the money comparison and how much more the people who purchase pay. Now, in the long run, like we've been talking about, in the long run, the purchaser wins, because 9 years, 8 years, 9 years, y'all remember, we get to that level. We get to that low depreciation, no car payment, vehicles not losing much value. You can't do that with a lease. So that's the goal, keeper or leaser. There's no in between. There is no in between on this. I'm either keeping this thing long term or I'm leasing it. This in-between period is how we've lost thousands and thousands and thousands of dollars. Okay? And we're going to come out of that. All right. Thank you, Alonzo. Said great information. Thank you. I love this. You get what I'm saying? This is fun for me. This is a topic that I love, and I love to see the results of the people who apply it. I love to see people who come in are like, man, it's a lot of stuff about car buying I had no idea about, but all right, I'm going to learn this thing. I'm going to use this new way. And now look at what I'm doing. Look at how I'm benefiting. Look at what I'm paying. Look at how I'm moving. I'm enjoying shopping now. So it's a thrill for me. All right, y'all. So we'll get ready to wrap. I'm gonna do a couple more questions and we'll get ready to wrap. If you have already gotten your book, thank you. Use it. If you haven't gotten your book yet, this is the official launch of my new digital book, Car Shopping for People That Hate Car Shopping: 7 Steps to Saving Time, Money, and Avoiding Dealerships. And you could get your copy for 75% off. Go to my TikTok bio or my Instagram bio, click the website in my bio, and then click the link that says 75% off. And you can grab your copy immediately. If you go to deshonsbook.com, you can get your copy, or if you scan the QR code, you can get your copy. All part of our book launch. And please, after you use it, if you could add to our reviews on goodreads.com, that would be great. We're already rated 4.94. We have over 30, I think we have 30 5-star reviews so far. So it's been great. So let's just keep that going. I just purchased the book. Thank you, Sunshine. Thank you so much. What's a good lease price for a Toyota Grand Highlander Hybrid Max? So here's what I would do when we're trying to see when we budget how much a good lease should be. We use 1.25%. So we use 1.25% because that's in between the 1.5%, which is the max we're going to pay when we lease a car. I'm not going to ever co-sign or back you up on taking a lease above that breaks the 1.5% rule. You're just paying too much for a car now that you're giving back in 3 years. And then the 1% rule, which is a steal, when you get a lease payment that's 1% of the MSRP, like you saw with Greg. He had a $56,000 car. His lease payment was $527. He got a 1% lease. So when we get our bid, we don't know where it's going to land because we don't know what the lease program is. We don't know how good, aggressive, or bad it is. It's based on how much they want to move the vehicle. It's based on, what the leasing company wants to do. If they want to move a good amount of those vehicles, it's going to be a decent lease program. If they want to move a lot of them, it's going to be a great lease program. If they don't care about moving them, it's going to be a bad lease program. But we don't know that until we shop our offers. But what we do is I'll use 1.25%. I'll look at the MSRP of whatever vehicle you just named. Let's just say it's 50,000, and you multiply that by 0.0125, and you'll see that's 625. So if this vehicle has a good lease program, that's my roundabout. Now, if it's a 1.5% lease, then that would be 750. So I take that middle portion. We use the 1.25% to see if this is a vehicle we should go after. And that's what we do. I've been doing this with people I used to shop for myself because I had a leasing company. But when I started working with people all around the country on these deals, I had no idea. We just don't know what the lease program is going to be. That's the consensus. The only way for us to know, Greg didn't know, Danielle didn't know, Tope didn't know, none of the people that you're going to see that have learned from ever knew. Any lease that I got, I didn't know the lease program was that until I shopped, got the offers, and then closed the deal. Because great lease deals, these deals that I'm showing you and the deals I get, they're not advertised. So if they're not advertised, we can't look to anywhere to know that there's an incredible lease deal going. All we could do is pick up, choose our car, follow our process. That's why I like us sitting at home, doing it my way. Thank you, Rob J. Enjoy it. Use it. The reason why I love how we do is because when you use what I'm going to show you how to do, you open up your computer. In about an hour's time, with an hour worth of work at my computer, I'm going to know what the lease programs are. I'm going to know if the lease programs, if the offers look good or not. If I go into these dealers, we don't know. But if I sit at home and I use the system that's in my book that some of you are going to be using, you'll be able to see what the offers are on a car and literally sit at your computer, hour worth of work. You're going to be getting offers to your email, and you're like, okay, these offers look all right. Initial offers look okay. You keep following, you use my system, you make your counter offers by email, and you get to a great deal. You'll also see, okay, these offers look high. These offers are at 1.8%, 1.9, 1.7. Looks like this is a bad lease program. But I'd rather find it out while I'm at my house rather than me going into a dealership, going back and forth for 2 hours to figure out, oh, the lease program is bad. Or I don't even know if this person even selling me the car at a good price. So at home is how you save the money. Can you turn in your lease early? You can't, because you're breaking a contract. You have payments remaining. If you have 6 payments remaining and you decide I'm going to turn in my lease, they're going to bill you for the 6 payments. The only way you get out of your lease early is you sell it. That's why we run our equity every three months. Once you get to about a year left on your lease, run your equity. You do it again at 9 months, do it again at 6 months, and you'll see what your equity position is. Sometimes your equity position says you got to wait till the end. Sometimes your equity position says I could sell this and get out of it now. But it's all based on your equity position, because other than that, you're breaking a contract. And we have to pick cars that we're going to enjoy. If you can't pick a car you're going to enjoy for 3 years, you haven't shopped long enough. You have robbed yourself of the experience of car shopping. If you can't find a car out here with all of these cars, and I find that most of you have been taught to shop wrong. You're not even looking at cars. That's why you notice they call you before your lease is up. Who's getting calls now? And even if you own a car, you're getting those calls now before your loan's paid off, before your lease is up. Hey, come on in. We could upgrade you. We could get you out of your car early. Who's getting that? Who's getting those calls right now? Who's getting those calls right now? We could get you out of your car early. You got 6 months left. We'll get you out early. Why? The reason why you're getting those calls is because they don't want you to shop. If we can upgrade you before you even hit the market, see, now I'm going to go into what my man Saquon Barkley just experienced with the New York Giants. They had him tied up. They didn't want him on the market. That's what the dealerships are doing with you and your leases and your purchases. We're trying to call you. We don't want you to hit the market. We don't want you to see those other products out there. You've been with Honda for 10 years. You know how much changed in 10 years? You know how much rankings and quality ratings have changed in 10 years? You've been a Honda owner for 10 years. You've been a Mercedes owner for 10 years. In 10 years, Hyundai and Kia have gone to the moon. They now got 10-year warranty. 10 years ago, Kia and Hyundai were laughed at because it was a quality concern. They said, you know what? This is how much we believe in our quality. We're going to do the longest warranty in the industry, 10 years. So in 10 years, times have changed. But if you never get out there and test drive and go see product, you basically in a bubble. And you're in the bubble that they want you in. You in the bubble of, let me stick with this car. All right, let me go see Charlie. It's time for a new one. You know all we buy is Ford. Meanwhile, all these other brands out here that's competing, that's saying, just come look. Just come drive it. Go drive the Ford and then come drive us. Look around. Test drive. You're not even giving yourself that opportunity. So if you cannot keep a car for at least 3 years, you have a shopping problem. You have a shopping problem. You're deciding too quick. You're getting cars that you're rushing into Because with all of these cars out here, you got to be able to find a car you're going to love that you can keep for 3 years. Because you can't break a contract earlier than that and have it and win. I'm sorry to tell you, but somebody told some of you that you could just trade out of a car in a year if you wanted to. Somebody told you you could trade out of a car in 2 years if you wanted to. Here's what they didn't tell you: how much that's going to cost you. So yeah, you could go buy the $30,000 car, come back in a year and trade it in. You know who would never do that? Cash buyers on here. Cash buyers would never do that. I'm going to tell you why. When you pay cash for a car, you lay out that 30 grand, you ain't coming back in a year to change it. Here's why. When you hear how much they're going to give you for the car, you're going to change your mind. You're going to be like, wait a minute, hold on. I just gave you 30 grand for this car. Now you're giving me 22 a year later? Nah, that's crazy. Yeah, so, you lose 20%, nah, hold on to it. But here's what happens with payment people. They hide that price. They hide the fact that you're only getting 23 when you just paid 30 plus tax. And now, what payment do you want to be at? Well, I could afford I know I'm upgrading, I know I'm getting out early, so I could go from like 450 to like 525. All right, so let me see what I can do for you. So now they're going to take that money from your car that you're replacing. You lost 7 grand in a year, and now they're going to pay off the loan, put you into a new deal that they charge you whatever for, but then stretch the loan out to where it equals a $525 payment, and they just come to you and say, hey, we got you in this car right here, $525. And you're like, oh, good, let's go, we got a deal. That is what we cannot do anymore. So somebody taught you, whoever taught you that you could go buy cars and flip them, you've gotten a huge lesson in depreciation this broadcast. We've been talking a lot about depreciation. Now that you know how depreciation works, you sit that car out there for a year, it ain't worth 30 no more. A year later, it's worth 25. I ain't even drive it. Now you know how depreciation works. Now you'll understand why you cannot switch cars that quick without losing a ton of money. And if they hide the money in your car payment that you're losing, that's how they get the deal done. That's how they get the deal done. Because if you saw the numbers, just flat out numbers without the car payments, you never okay the deal. You never okay the deal. But they hide the losses in your car payment. You just like, man, I'm just paying $500 a month for 6 years. You don't realize what that means. So the way you're going to shop now is going to be very easy. You're going to understand every aspect of the car transaction, and we're not even going to concern ourselves with these payments that people try to hide us. No, we're going to concern ourselves with paying the least amount for the car, getting our own fine. You'll see. So anyway, today's lesson was really more on depreciation. We covered a lot of other things too, but I think you guys got a great understanding of depreciation and how you're going to pay depreciation whether you buy or lease. If you get a good lease, you pay less for depreciation. That's the whole goal. Short-term people lose with depreciation big time. You buy a car for 40, it's worth 20 in 4 years. When you lease, you're trying to pay less than that. So, all in the book. Thank you so much. I see you all. I appreciate your compliments. I appreciate y'all being tuned in. I will be back. We'll talk more. And thank you all who got the book. I see a lot of you saying you got the book. If you just jumped on and you see people in the comments saying, I got the book, I got mine, the book is great. They're talking about my new digital book. It's called Car Shopping for People That Hate Car Shopping. 7 Steps to Saving Time, Money, and Avoiding Dealerships. You can get it now for 75% off as part of our book launch. Just go to my TikTok bio or go to my Instagram bio and click the website and then click the one that says 75% off book. Or you can go to deshonsbook.com or scan the QR code, get it, use it, and make sure you report your success story back to me. All right. So I will see y'all soon. We'll get more done, but I appreciate you. This is always fun. We'll see you in the next hour and we'll keep this thing going. All right. Let's keep this money in our pocket. Let's keep protecting ourselves. And God bless y'all. No, it's not 97. I'll adjust it. You might have missed the countdown. Let me see if I can reset it. Try it again in about 3 minutes. I'm gonna see if I can reset it. It was good for 30 minutes. So try it now. You should see it. If not, DM me and I'll try to get you a special link if you can't get the 75% off price. But other than that, get the 75% off. All right. I'll see y'all soon. Welcome to Insider Secrets to Below Market Car Deals. That's what we call in this segment. Insider Secrets to Below Market Car Deals. If you're car shopping now or you will be in the next 12 months, type me in the comments. I want to talk to the people who are in the market for a car right now, or you will be in the market in the next 12 months. Type me in the comments if that's you. My new book is on sale for 75% off. It's called Car Shopping for People That Hate Car Shopping. If you hate car shopping traditionally, I want you to be honest and type me in the comments. I saw something on TikTok earlier, and I want to share it actually. If you might not be able to see it on TikTok, but on the other platforms we're on, I'm going to stream it. And I'm going to see if I could actually bring it into the broadcast. Okay. Now, this is from a young lady. I was tagged in this video. If y'all ever tag me in a video, if you're like Deshone, what are your opinions on this? Just tag me. If you don't know me, my name is Deshone the Auto Advisor. I've been in the car business. I left in 2020 to focus on teaching people like you how to save all the money you're supposed to be saving every time you buy, lease, or sell cars. And when I say sell, I mean we don't trade cars, we sell them. So this young lady, her name is SD Sandra, and let me see if I can share my screen and bring this in. Right. So you should be able to hear her. I'm going to have the volume up, and I want y'all to listen to this. Okay, we'll get to Q&A. You know, if this is your first time on one of my live sessions, we'll do Q&A. But I want y'all to hear this. What this young lady said. And while I'm doing this, while I'm bringing this up, make sure you are subscribed if you're into financial literacy. Make sure you're following if you care about your money, and share this with somebody if you care about people other than yourself. So let me bring this in, okay? All right, so
automotive finance.
Let me know if y'all can hear this. Can y'all hear this, young lady? I'm gonna turn this up.
My name is Sandra, and I've been an automotive finance manager for over 10 years.
Can everybody hear this?
Today, I'm going to
give me a 1 in the chat. Light up the TikTok screen. TikTok, I want y'all just tapping the screen, because when you do that, you shoot the likes up, and then TikTok sends messages out to everybody and says, something's going on over here. Y'all need to go watch this. So just tap the screen and you'll see the likes go up. Can y'all hear this? Let me know. Can y'all hear this, young lady? Let me get to my comments. Hold on. Let me get to my comments. Can everybody hear that? All right, perfect. Let's let her roll. Come on,
Talk about things you should consider before leasing a vehicle. Before leasing a vehicle, you should understand as a consumer, there are no benefits to leasing a car.
Pause right there. This is what I call confidently incorrect. Confidently wrong. Girl has no she ain't got no kind of what is it called when you're talking but you're not confident? You get what I'm saying? There's no uncertainty there. There's no uncertainty. So she said, and I'm not attacking her, I'm attacking her video. I don't know her personally. She's probably a wonderful mom, sister, daughter, someone's wife, possibly. I'm not attacking her personally. I'm talking about the video that she confidently shares that could impact people. So let's keep it going. She said there's no benefits to leasing. Burned. She had a bad experience. It's clear. Let's keep it going.
With leasing a car, you are still required to take care of normal maintenance. You are required to not have any accidents or damages on the car, but life happens and things like this happen.
Let's pause it right there. So with a lease, some of you have been taught, oh man, if I lease, I got to bring the car back perfect. That's what she said. Life happens, you're required to. Normal wear and tear is just fine on a lease. If your lease should be 3 years, no more than that. We don't do 4-year leases. We'll talk about that later if y'all want to know why. But when you lease a car, they expect wear and tear. They expect you to bring the car back and have a couple dings, a little brush scratches here, there. Like, they're not expecting you to bring the car back perfect. They're expecting what is called normal wear and tear. What you are built for is something called excess wear and tear, which is basically negligence. If you have a little ding on the car when you bring it back, no charge. If you have a baseball-sized dent on your car, we're charging you for that. And here's how I want you to look at it. Let's say you owned your car and you were coming to trade it in or sell it. Anything that would negatively affect your value is going to be billed because it's a cost. So when you go sell your car, a little ding doesn't usually affect the buyer's value of how they're going to pay for it. A baseball-sized dent does. Make sense? Y'all with me? Type with you if you with me. Let's let Sandra continue to talk.
Well, if it does happen, you have to understand at the end of your lease, you may be charged. Also,
so she just said she didn't go deep in terms of, she just made it look like, well, if you bring back the car and there's anything wrong, you may be charged. Not true. Now you have the accuracy. In fact, most leasing companies have something called the credit card rule, where if a scratch can be covered by a credit card, it's not billable. So Mercedes had it. You literally could, if you could cover it with a credit card, a scratch had to be a certain length to be billable, which means it's excess wear and tear. Because why? They expect someone who drives a car for 3 years to bring it back with a small scratch, medium-sized scratch. A large scratch? Well, we got to pay for that.
There's a mileage limit. You either have 8,000
Now there's a mileage limit. Who's heard this with a lease? There's a mileage limit. Here's what they don't tell you. So I got my banner up. Everybody, while you're on here, you could get my book. It's called Car Shopping for People That Hate Car Shopping, because I don't want you listening to bad advice. I want you to test advice, test my strategies. Everything that I share in my book is in my videos. But if you want everything in one place, step by step, where you're like, Deshone, I don't want to go through 40, 50 videos and try to see which ones are for me. You go get my new book. It's a digital book. The reason it's a digital book, because every time there's a new update, I have to update the book, and everyone gets the update. For instance, Vroom went out of business 2 months ago, and so I had to update the book, and everybody got the new version. But get it in my TikTok bio. You're not going to leave the broadcast, so you're not going to miss anything we're talking about. Just go, but I don't want you to miss the calendar. You can get it for 75% off for a couple minutes. TikTok bio, Instagram bio, or you can scan the QR code or go to deshonethebook.com. Any of those 4 ways, get your copy for 75% off. Now, when this young lady says there's a mileage limit, what she doesn't say is you pick the mileage limit. See, it makes it look like, some of you may have thought, you might have been thinking, oh, they give you the mileage. They tell you you could only drive 10,000 miles per year. You can only drive 12,000 miles per year. They say to you, how many miles a year do you need? You see the difference? Now, this young lady has been in the car business. The reason I'm on TikTok today, the reason I went to TikTok in 2021, God bless me, my whole life changed because I went to TikTok, and in my first day, my first 24 hours, I had 100,000 followers. My first 30 days, I had 1 million followers, because I went there with information and numbers that people hadn't heard before, like in the way that I deliver it. Everyone delivers their own way. But the mileage limit is picked by you. So you're going to select 10,000 miles per year. You're going to select 12,000. You're going to select 15,000, 20,000. When I came, don't think because somebody says they're in the car business, or because, hey, I've been an automotive finance manager for this many years. They're making these videos and they're they're confidently wrong. I think I made that term up. I want you to, whenever you know something that someone else doesn't know, and you see somebody talking, and they just that's the term, confidently wrong, and that's dangerous. You pick the mileage limit. Just because you run a car business doesn't mean you understand numbers. In fact, most car salesmen, if I got any car salesmen on here, be honest, nobody trained you. Be honest. See, I got any realtors on here? Anybody in real estate, anybody in mortgages, type of M or type of R if you're in real estate or mortgages. We're going to let Sandra finish up, but I got to go deep with this whole thing, right? Don't you know people in your industry that don't study? Now, in your case, in real estate mortgages, you're required to study. You are required to pass tests. You are required to understand depreciation and, all the things that come into a financial transaction of a house or a mortgage. Cars, forget it. You could have a job at a car dealership next week if you wanted it. Deshone, what you mean? It's that easy to become a car salesman? It's that easy. If you got half a personality, you walk into 5 car dealerships and go to the manager and say, hey, I'm looking for a job. I want to make money. You will have a job in 2 days, 3 days. Not only that, because that ain't the bad part. They will unleash you on the public in about a week. So not only, look, if they were going to take you in and you could get the job in 2-3 days, but then they train you and now you're trained to work with the public, that's different. If you had to do a month-long training, go study finance, study loans, study resale value, study all the leases, purchasing, all the things you're going to be talking to the public about, you might need a 30-day period before you could even talk to the public. Real estate agents, they got to go through 75 hours of training and then take a school test, then a state test before they can work with the public. Car salespeople, nah. The person who's helping you buy your $50,000 car, dude, all he had to do was come in, smile, interview well, and then take a couple tests on the car. He don't know nothing about numbers. He don't know nothing about finance. He don't know nothing about nothing. And he's helping you make a $50,000 transaction. Why am I telling y'all this? Because this is the emphasis. Here's what I want y'all to remember. And then we'll get back to Sandra. If those who are supposed to be trained to handle your money are not trained, then you better be trained. If the people who are supposed to be trained to work with your money are not trained, you better be trained so that you can recognize you ain't trained. So you ain't doing my deal. Let's get back to Sandra.
10,000 miles a year, 15,000 miles a year, or 18,000 miles a year. The more mileage you're allowed yearly, the higher your payment is. So what I would truly suggest, if you are definitely consider leasing a vehicle, go onto the manufacturer's brand website. If it's Nissan, go to Nissan.
Now, this clearly shows she's not confident in getting you your best deal, because there's no way. I have done thousands of deals when I was with Mercedes-Benz, General Motors. We've run thousands of leases. No deal that I ever said to the customer where I'm like, here's what you want. You use my book, you use the stuff I teach. This is what's going to happen when you drive off in your car. Guarantee it. Dang, man, that was a tight deal. Dang, we barely made a dime on that deal. Hey, yo, that deal put us in the red. Man, we got to make it up on these other customers. A deal is when a manager doesn't want to do a deal, a real deal. I'm talking about a deal where you win. You got all the money you're supposed to get off, all the discounts, all the rebates. You got the best, everything. You got the best loan, everything. They looking and saying, man, I don't want to do that again. You get what I'm saying? They're not, if somebody tells you, go send your friends, I'll give them the exact same deal I gave you, you didn't get, that's a red flag. That's a red flag. No one wants to duplicate a deal where it's a real deal. So She's saying, if you want to lease, go look at the website. Go look at the websites that say, come drive this Nissan Sentra, $299 a month with $3,500 down, plus tax, plus fees. These ain't no deals. Nobody who I was ever talking to, y'all saw what I just ran down. I'm giving y'all what happens in the back office. I'm giving y'all, and any car salesman that's on here, you know what I'm talking about, including this young lady. The deals that you make that your manager barely wants to accept, that's the deals I want all of y'all making. I want every single time y'all make a deal, lease, purchase, new car, used car, I want the manager saying, ooh, they want to do that one. When you look at those numbers, it is always thousands different than what is on the commercial. Person comes in and they pay $350 a month with no money down, but the commercial says you could pay $350 with $3,500 down plus tax and fees. Well, that's a difference of about $5,000. So let's get back to her. You see, what I'm saying, she has people that will listen. She has somebody who watched this video and said, yo, thank you. I'm glad she made that video. No benefits to leasing. Thank you. Don't realize this young lady just cost her thousands of dollars. Thousands. Because no one who's not keeping their cars 8 years shouldn't be leasing. If you are not keeping your cars 8 years, you're going to see eventually, like your next car should be a lease. And when you use the strategies I teach to get the best lease deals, which means you shop around, you're going to see how wrong these people have been when you see how much your car payment is versus the car you're driving. When you look outside and you see a $40,000 car and you only paying $500 a month for it, when you know a $40,000 car usually costs you $800 a month, you're going to be like, dang, I listened to the wrong people for too long. So let's get back to this young lady.
USA.com and type in lease deals. They will show you all the nationwide lease deals in your area that you qualify for. It will let you know your credit score that is required to get the lease deals, the down payment, and how much your monthly payment could possibly be. But do make sure you read the fine print because it will tell you the certain type of trim that you're allowed to get for that monthly payment. The type of person I believe a lease is good for is a business person that
killed y'all with that. She's murdering y'all. She's literally, it's like she said to herself unintentionally, I'm going to say everything in the video wrong. That's like the people who know me. If you've been around me, if you've seen my content, if you got a deal or two or three from learning from me, if you've read any of my books, if you've been on any of my Cars from Home University, anything where you've had a chance, if you've been to my master classes, anything that I put out to educate the public and help y'all win, everything she's saying is the opposite of the truth. It's not a lie because in her mind, she's not lying. She's doing the best she can. It's called confidently ignorant. And that's dangerous. So I ask you to question the people you're learning from. Everybody can turn on their phone and make a video. Car salesmen out here, I watch car salesmen buy their cars when they should be leasing all day long because they were taught. I didn't finish that story. Y'all know the reason why I came to TikTok? 2021. I was praying about this. I'm telling y'all how serious this was, right? Because I was on Facebook and I said, you know what? It's time to expand. I got to go to TikTok or Instagram. Somebody hit me and they're like, D, it's a guy on TikTok. He's an older guy. He teaches about cars like you do, but you know, he got a nice following over there. At the time, he had 150,000 followers, somewhere around 150, 160, right? So I'm going and I'm watching his videos and I'm like, man, I like this guy. I love to see somebody educating the public. He was in the car business and he's going deep. He's like going, and I'm like, man, let's go. I have absolutely we need more people. like this who's going to set the public free and help y'all actually know the behind the scenes of all this money that's in your car deals that you haven't known about, but only an insider would know. So I'm like loving it. And so now I get to a video of his because I'm binge watching. I'm like on video number 10. And somebody asked him, hey, I noticed you don't really talk much about leasing. Could you kind of explain, leasing? He makes a video. Remember, I'm trying to decide TikTok or Instagram. Remember, that's what I'm trying to decide. He said, listen, it's a good question. Never lease your cars. Never lease your cars. They're gonna limit you with the mileage. You're gonna have tons of fees at the end. They're gonna bill you. Like it's just not, just buy your cars. I was on TikTok the next day. I said, God, thank you for answering my prayers and showing me where I need to go. Because if this brother out here with 150,000 followers and this is what he's teaching the public, then the public is in trouble. I need to get over here. And when I came to TikTok, as I said earlier, it just went crazy for me right from the get-go, because the information that I'm going to deliver, the numbers, are going to cut through all of this stuff. She's not saying anything about numbers. She's only giving you, she's talking as someone who's been burned. Pay attention when people talk like someone who's been burned and say, don't do something. It didn't work for me. Well, did it not work for you because of you or because of what you tried to get? Was it the lease or was it you? Was it the way you structured your lease? Was it the money you paid for your lease? Did you not get a good lease deal and you ended up paying a high monthly payment for a car you're giving back? And you looked at that at the end of the lease and said, I paid too much money for that car. Did you not get the mileage you needed? You you drive 15,000 miles per year, but because that $10,000 mile a year payment was $400 and the 15,000 mile a year payment was $445, you decided to take the 10,000 mile a year lease, and then you went over the mileage by 15,000 miles and ended up with a bill for $3,000-$4,000. Is that why you didn't like the lease? Because all of that is your fault, not the lease's fault. Come on, Sandra. Come on with it.
Drives around.
And we're going to go into questions. I just thought with me doing these live shows now, I'm enjoying it. You're going to see I'm going to be bringing slides. We're going to be talking about a lot of different things. All is in my book. So if you just like Deshone, you know what? I'd rather just get all the information in one spot than download your copy of my new book, Car Shopping for People That Hate Car Shopping, 7 Steps to Saving Time, Money, and Avoiding Dealerships. In my TikTok bio, Instagram bio, it's $24 if you get the 75% off price. So go there now. As long as that timer hasn't expired, you can get it for 75% off. Go to deshonesbook.com or go to or scan the QR code. Come on with it.
Their lease for business, because that becomes a write-off. They also can write the maintenance off on the car and anything else the car requires, because now that isn't a business expense.
Okay, so she just said she recommends, let's go deeper, because she's going deep on this.
Me, I wouldn't suggest leasing.
Normal people like me, like you, like me, like her, like most of you who don't have a business.
And I would never do it again. Let me know if you guys have any questions.
Got burned. You've been burned, Sandra. So she just told you. Normal people like me shouldn't lease, and I'll never do it again. Burned. Your fault. You go into a complex financial transaction like a lease, which means it's not cut and dry. You can go into a purchase, $30,000. You can put anything from that buyer's order into a calculator, add it up, throw it into a monthly payment calculator, and it should match. Put the interest rate in there. What interest rate are you using? 4.9. Put that interest rate in, boom. Your payment's this. It should match. Very transparent. Still got to learn how to get deals, but transparent. You go into a complex structure like a lease, no training, no understanding, and you end up in this position. I appreciate the person tagging me in this video. They asked my opinion on it. I figured I'd give my opinion live on the show. Somebody just said, lost me at no benefits. Let me go to the comments now. Let me get to the comments because I want to hear what all of you think about this. Deep. Yeah, hit the like button. Thank you, Excel Pro. Appreciate you. The managers are trained. And look, I'm going to be honest with you. Most managers are salespeople that went to become a manager. They didn't actually, they're not getting trained like realtors, like mortgage agents, like insurance. They're not getting trained. Car salespeople are not trained. As someone who was in the business for 14 years, they are not trained. No numbers, no finance, no resale value, no understanding of depreciation. You're selling a depreciating asset. You need to be able to explain to the public what that means. You need to be able to explain to the public how that affects them. They're about to buy something that's going to be less. It's going to be worth less than they paid for it the moment they buy it. You need to be able to explain that to the public, how they need to handle this type of asset they're buying. You just paid $20 for this vehicle. Tomorrow, what is it worth, y'all? Fabulous. If you're driving 20,000 miles a year, if you're not are you keeping your car 8 years or longer? Yes or no? Yes or no? So look, hold on. I just read that question and it threw me off. I was talking about depreciation. Okay, Optima, if you didn't receive the book, just so you know, DM me. I gotta get with the team because it's usually, and I know we have people going to the website, they're trying to make sure they get the 75% off before the timer runs out. It's usually a number or a letter is switched up in the email. Because if it's not in spam and you didn't get it yet, that's the case. But I'll make sure as soon as I jump off the show, I just need your name or the email you use to purchase, and I'll make sure the team manually sends your book out to you. Okay, you'll get the email immediately. You don't want to keep. You said you don't want to keep, then you should be leasing. Very, very simple. Because driving 20,000 miles a year, you're going to kill the value of your car. Hold on. Let me get off this screen. Hold on. I'm not going to share my screen anymore. All right. Here we go. You should be leasing. And you got to learn to shop your lease deals. Because when you shop your lease deals, you're going to see they're not all equal. In fact, they're all different. Every vehicle has a different lease program. And what you're going to have to do is identify a vehicle and then get quotes on it, get multiple quotes, because not only is every vehicle different with the lease program, every dealer is different with how much they're going to discount the car for you. There are people, did somebody teach y'all that, did someone teach you that all car dealers have the same prices? I never want to assume what a person believes to be true. And some people do believe that every car dealer, like they'll use terms like, I'm done with Mercedes because they had a bad experience with a local Mercedes dealer. They'll say, oh, I'm done with Nissan because Nissan's lease is overpriced. But meanwhile, you went into one dealer, you got one offer, and now you're using that to say, this car is overpriced. This dealer is overpriced. Dealers are independently owned and operated. And so the name of this segment is Insider Secrets to Below Market Car Deals. Below market car deals come by multiple offers and finding the dealers who do the discounts, who do the big discounts. But there's no map that tells you that. There's no, hey, go to this dealer right here. That's the one. No, unfortunately, that's not the way it works. You have to get these offers. I teach 2 ways to do it. One is my way in the book, which is by email. We send these dealers emails. We get our offers all through email. That way we can talk to 25 dealers at once. I have a strategy. I call it the 25 to 5 in the book. You're connecting with 25 dealers, take you 20 minutes. I know some of y'all like, Deshone, that sounds crazy. 25 dealers. How long is that going to take? 20 minutes. I told y'all I got this thing to a science. We do it online and we're letting 25 dealers know what we want. And then we're narrowing that down to the 5. We need to hit that many to get 5 quotes. And those 5 quotes are going to look so different from each other. It's going to blow your mind. You're not going to be able to believe that the same car, some dealers going to say 500, some dealers going to say 550, some dealers going to say 6, some dealers going to say 7. Literally, it's that big of a difference. And that's going to show you why you should always be getting multiple offers, because some people trying to take your head off. So, all right, what are the best lease deals? You won't see them online, David. You won't see them online. Great deals, phenomenal deals, like I talked about at the beginning of the segment, where the sales manager is back there and the salesman is like, "Dad, man, we don't want to do that deal again." Where a person's looking at you and saying, "Man, how'd you learn to, are you in the car business, or what? You negotiate for all of that?" The little comments that they make to I want you hearing this stuff. If you haven't heard this stuff, you ain't getting your best deal. Like if people ain't looking at you saying, "Man, how you get this price?" Like you ain't getting your best deal. So that happens through multiple offers and getting bids. You got to be willing to step out of the old way, I call it. That old way is one-to-one negotiations. You cannot save all the money one-to-one negotiations. You can't. You don't have anything to compare it to. So even if a person takes off $3,000, you don't know that's the bottom. You need comparison offers. And that's the way we shop for everything. If you think about it, you go to the grocery store. How do you choose your products? Some of you might say, "I love Tide. I'm only getting Tide." Some of you look and say, "You know what? Tide is on sale. All is on sale. Pure, all right. You know what? That's the best value right now." You make a decision quick based on comparative shopping. I'm telling you, the same thing works in cars. That same style of shopping works in cars. Not only does it work, not only have we been doing it for years, it's the key to enjoying your car shopping. It's the key to knowing every time you make a deal, I won. Everybody bid, I picked the best bidder, I won. And you won. You're the prize. You'll start seeing yourself as the prize. How many people have bought a car and you felt like you had to convince them to sell you a car? You had to basically say, "Listen, am I the customer? Am I the prize here?" What the heck? You almost feel like you feel a little like you're not valued. When you use these strategies and you start getting bids, look, Lynn said, "I always feel ripped off." I'm sorry to hear that. When you start changing the actions, you do the same thing, you get the same result. That's the definition of insanity. So you keep shopping the way you shop, you're going to get the same feeling, the same results, the same. You drive away from the deal and you're like, "Man, you think we did all right?" "Yeah, I think we did all right. You think we could have got more money off? Yeah. I think we could have got more for our old car." All of this stuff that you drive off thinking, that's called buyer's remorse. That's buyer's remorse setting in. When you change the way you do things, that's going to go away. That's going to go away. Should I put a bigger down payment on a lease to take bigger monthly payment? No, you shop for your lease deals, and you must have a deal below 1.5. You must shop and get your best deal with no money down before you add money to the deal. That's what's confusing us in a lot of cases. That down payment, when we start seeing the payments, we start seeing the monthly, and we get confused about the deal, the overall deal, the price we're paying for the car. You shop for your leases with no money down, 12,000 miles a year, only first month's payment, total out of pocket. It's all in my book. For those of you who like, "Deshone, I ain't gonna remember all of this." Grab my book. It's in my TikTok bio, Instagram bio. This is the part called multiple offers. This is step 5 in the book. But when you're shopping for your lease deals, you're shopping with no money down, first payment out of pocket, and you are judging all your offers. Now you pick your best offer. And if it's below 1.5%, now you can apply money down if you want to lower your payment. That means you're not buying your deal, you're just managing your payment. Many people think because they put $4,000 down and they look at their payment, they're like, "Oh, I did good." No, you did good when you had a deal before the down payment. You got to be able to assess your deal. And if you listen and you use what I'm telling you, you will be able to assess your deal based on, I got multiple offers. Who gave me the biggest discount? You did. Has nothing to do with my loan yet. Nothing to do with my monthly payment yet. Who gave me the biggest discount? Who gave me the best lease offer? You did. Has nothing to do with my monthly payment. Nothing to do with if I'm going to put money down to lower that payment. We judge our lease deals by comparing the percentage we're paying into the car. We take the monthly payment and we divide that into the MSRP. When you divide a monthly payment like 500 into 50,000, that's 1%. Anything under 1% is a steal. It's not a lot of 1% offers out here because you need big discounts from the winning bid, from the winning dealer, and then you need an incredible lease program from the bank. When those two things combine, you could see a 1% steal. But a deal is between 1% and 1.5. Anywhere between there is a deal. You need a big discount and a good lease program. Big discount from the winning dealer, good lease program. You're going to be between 1 and 1.5. Big discount from the winning dealer, bad lease program, you're going to be over 1.5 no matter what. And we walk away from those cars. We go lease something else, we go get our other choices, and we might come back and see that car in 3 years if they decide they want to put a better lease program on the car. We don't take bad lease programs. We don't sign leases over 1.5. You can't look at an offer and say it's 1.6%. Let me put 3,000 down. Now it's 1.4. Good. No, it's not. It's not 1.4. It's 1.6. 1.6 is 1.6 with no money down. You can't buy your deal. You can't buy your way to 1.4. You can't buy your way to 1%. And when you bring this into your shopping, the confidence you're going to have to close these deals is going to be crazy. I know you're getting more confident just by listening because you're like, I have not shopped like this. And this is quick. This is 30 minutes, 45 minutes from home. This is 45 minutes from home. I want y'all doing deals in minutes, not hours, days. Let's go. It doesn't make sense to put money down on a lease, right? It does. It certainly does. You need to know the risk. Let's talk about the risk of money down on a lease. If your car is totaled or stolen, could y'all keep shooting the likes up on TikTok? If you're going to spend time with us, you're going to spend 10, 15 minutes. Could y'all just keep tapping the screen? Y'all let TikTok know that we're doing something big over here. They send more people. And if you're on any of the other platform, Instagram, YouTube, Facebook, could you tag somebody that you care about? Listen, you don't want to get to the point where somebody you know finds me and then they telling you about me. Hey, you watch this guy Deshone, man. I use his stuff, man. I just got this car. Oh man, yeah, I've been watching him for a year. Hey man, why you ain't tell me? Come on, we come on, come on. We gotta share. I'd be mad. You know somebody, you know I'm shopping for a car. You ain't tell me about this guy. So tag somebody, tag a friend, or hit the share button. So money down when you lease, two things put that money at risk. First is if the car is totaled, insurance is going to pay off the bank, off the leasing company, and then you have to go car shop again. So if you put $4,000, $5,000 down on a lease, that money's gone. You're not building equity by putting more money down. If the car is stolen, the money's gone. So how do we assess our risk? It's very easy because I've had people who put money down on leases all day long. Here's how you assess your risk. How many cars have I had stolen? If the answer is 2 or 3, you're a bit of a higher risk. You probably should try to get your money, your minimum down, like no money down or very minimum. The second question is how easy is the car I'm leasing to total? If I'm leasing a Honda Civic, a little fender bender might total that car out. So I don't want to put 3, 4, 5,000 on a Honda Civic because it's easy to total. So those are the two questions you ask yourself. It's very simple. How many cars have I had stolen? Some of you say never. I've never had a car stolen, which means chances are you're not going to have your car stolen and you're not going to lose your down payment on a lease. And then the other one is how big the car is. If you're buying an SUV, something that's hard to total, or you're buying a mid-sized car, hard to total, then you can stand a little bit more risk with the down payment. But again, If you can get the car, you're going to see a lot of people. I'm going to show y'all right here. These are 3 people right here that got Danielle. Danielle leased her car, her Audi, no money down, $44,000 vehicle. She got her bids, her best offer, $550 a month. $44,000 Audi A3. Some of you on here you might have this car. Some of you might be leasing this car. Some of you are financing this car and you're paying $700, $800, $900 a month. Now, let's look at this young lady, Kimberly. Now, Kimberly is leasing her Maserati. It's a $91,000 vehicle. She's paying $944 a month. Some of you have this same car and you're paying $1,800 a month because $91,000 is $1,800 a month on a finance. She's paying $944. No money down. Okay? No money down. Let's go to this next person. Bonita. Bonita leased a Kia Telluride. She put $600 down. That's her payment, $600. So if you can find a lease deal, here's another person. Charles. These are all people in my private Facebook group. I have a video library called Cars from Home University where it's the video version. So I'm fortunate that I get to work with car shoppers all around the country. So when I'm reporting to y'all, I'm reporting as someone who literally has his post on the market around the whole country because I got people around the whole country that is using my stuff, that are reporting the deals. So $48,000 Hyundai Palisade payment is $597. $48,000, that's a $900 a month payment. It's almost 50 grand with taxes. We're not even taking into account the taxes. That would probably really put a person about $1,050 a month for 5 years, $950 a month for 6 years. Charles is paying $597. So if you can find a lease deal that is in your budget with no money down, like I just showed you those 4 people did, that's the move. That's the move. You shop for it. You shop multiple offers. And if you could do it, that's fine. But if you see that, you know what? I got a phenomenal deal. It's 1.3%, but the payment is $600. I really like to see it about $525. Then put your money down, but assess your risk based on what I just laid out for y'all. Okay, that's right. Do not gatekeep. This man know what he's talking about. Thank you, bro. Appreciate you. Thank you. Just shop around and ask them what's the buyout on your lease. I'm not sure what that means. Hold on. We had a couple questions. A couple comments. I know y'all are comment with each other. So now let's get back to the comments. I know I'm off the grid, but why is my credit score much lower than Credit Karma? Because Credit Karma is not it's not a credit bureau. It's not a credit bureau. So what I would tell you, and that's not uncommon. Like I remember a guy. He was actively working on his credit because he wanted to get this Mercedes when I worked there. And he was like, look, this is where I'm at. I've been working. I'm looking at it right now. This is where my score is at. I said, okay, come on in. We got there. We ran his credit. It was like 70 or 100 points. I don't remember because it was probably 4 or 5 years ago, but it was literally so far away from where he said it was. And I said, what did you use he said, I used the Credit Karma. That's when I knew we can't have faith in Credit Karma. We got to really we got to get our bureau scores, TransUnion, Experian, Equifax. You shouldn't be doing this regularly. You should really just be doing this when you want to buy something, when you want to lease something. Like go and get your real 3 bureau scores, not your Credit Karma monitoring scores. What about paying your car cash? Black Cherry, good deal. Good deal. As long as you are shopping effectively, that's fine. But if you are leasing, if you're not keeping your car 8 years, then you're tying up a lot of money in a car versus a person who leases. It's just give you an example. Any of those cars that I just laid out that those people leased, if you are going to buy them and keep them for 8, 9, 10 years, so you can let that depreciation cool off, which means you lay out 40 grand, that car ain't worth 40 grand the day you buy it. That car is worth, that's what I was saying earlier and I lost my train of thought. The day you buy that car for 40 grand, it's no longer worth 40 grand. A minute later, right? So that's how you got to really look at depreciation. This car is losing value like crazy. So I'm either going to lease or purchase to try to minimize the amount I pay in depreciation. And for people who are not keeping their cars 8 years long enough for the depreciation curve to really level out so that you're not losing a lot of value, the person leasing is killing you. Those deals that I just named, if the same people purchase those cars, the money that it's coming out of their bank account every month and every year is so different. That's why when I was telling you what their lease payment was, I was also telling you what their purchase payment would have been. So you could just do that simple math. That she leasing it for $500. If she would have bought it, it would have been $900. That's why has anybody seen the videos with the average car payments of car salesmen? Anybody see that video? I know it went viral. There was a video where they were going through dealerships and they were asking car salesmen and car sales women what their average payment was. Anybody see that video? The payments were crazy because they purchase. And it starts with the same thing we started the segment when I showed y'all Sandra. Sandra's video. In the car business, absolutely should not be allowed to counsel the public on financing car transactions. She doesn't know anything about what she's telling you. She's only telling you this is what happened to me, don't do this, but she's not telling you based on training. So you don't want to be you don't want to. All right. Sorry for all these lease questions. How long are leases typically? And if I ever get off a subject, because I'm literally taking questions from 4 platforms, just remind me of what I was talking about and we'll get back to it. How long are leases typically? 3 years. You can shop for a 2-year. You don't ask for a 2-year lease because most people don't have them. If they have a 2-year lease, they'll tell you. Most 2-year leases are not good. They're going to be overpriced because the manufacturer wants the car back in 3 years. So 3 years is what we go for. You can do 39 months. We do not do 4 years. We do not do 4 years. It's too long. It's too long for a car that you're giving back. We don't do 4 years at all. You're eliminating some of the benefits of leasing, which is switching a car quickly. 4 years is a long time for a lease. Not for a purchase, a lease. And then when you look at the amount you're paying over 4 years and you add all of those payments up, you're going to see you paid too much. All right. Hold on. Let me put my banner back up for everybody who's like, Deshone, I need this book you have. My new book this is my book release. So part of launching this live show is in connection with, this is the book release strategy. We want everyone to have this book. We're doing 75% off. It's called Car Shopping for People That Hate Car Shopping, 7 Steps to Saving Time, Money, and Avoiding Dealerships. It has the 7 steps that I use that you're going to use no matter what your situation is, whether you're purchasing new, leasing, purchasing with cash, purchasing pre-owned, you're a high mileage driver, doesn't matter. You're going to use these 7 steps to get your best deal, save all the money every single time. So go to my TikTok bio, go to the Instagram bio. As long as you get there before the timer runs out, you get your copy for 75% off. You can download it immediately. Or go to deshonesbook.com, scan the QR code. Low miles, buyout lease. No, I wouldn't buy out my lease unless I'm keeping it. If you're keeping, because listen, all you're doing, Lynn, is buying a pre-owned car. We talk about this when it comes to these lease buyouts. Y'all are going to stop your family from buying their leases out when you really understand this. Buying your lease out is just this. It's just buying a used car. The only difference is you didn't go out and look for a used car. You had an opportunity to buy a car that was already used and you bought it. That's what buying your lease is. It's you're going in, you're going to do the paperwork, they're going to retitle the vehicle, they're going to re-register the vehicle, and now it's sold to you as a used car. That's what happens. So when do I recommend you buy a used car? When you're going to keep it long term. Because when you see the comparison, in my book, I'll link you to a video in the Cars from Home library where I'm comparing buying new, leasing new. Buying new, leasing buying new, buying new, leasing, because leasing is really always new. 99.9% of the time you're leasing a new car. or a demo. So I'm comparing buying new, leasing, and we see that leasing blows it away by thousands of dollars. When you go down the road, though, 8 years, the person who bought wins. Very important to know that. Down the road, the person who purchased wins, because the person who leases still has a car payment, and they're going to always have a car payment. You pay for the luxury of leasing. You pay for the always under warranty, always have the latest and greatest, always have you pay for that. So in the short run, you're only paying a little bit of money when you know how to get great lease deals. The person who purchases is paying so much more than you, but in the long run, 8, 9, 10, 12 years later, they win. So it's important for y'all to understand that, so you know how to pull these strategies out your pocket for your family when the time is right. You ask them, are you keeping the car 8 years or not? No, I'm not. We're going to shop for an aggressive lease. Are you keeping your car more than 8 years? Yes, I am. We're going to shop for our best deal on a purchase. Very, very simple. I also then compare buying pre-owned versus leasing, which is what I was talking about. Somebody had asked a question about buying your lease, and I'm comparing the lease buyout, which is no different than buying a used car. That's the point for everybody to understand. When you buy your lease, it is simply buying a used car. Now, we might do a segment where we go deep on lease buyouts, where people see that most times when you buy your lease, you overpaid for it. But we're not going to talk about that right now. Used cars compared to an aggressive lease, I linked to this video in my book, and this is the outcome. I'll tell you now, this is the outcome. The person who leases and gets a great lease deal pays about the same, actually a little less, than the person who purchased a used car. Why is that important for you to know? Because if you're driving a brand new car for $500 a month, and I just went and got a used version of that car, 3 years old, and I'm paying $500 a month, who's winning, you or me? You're driving a brand new 2020 whatever, latest, and you're paying $500 a month. I'm driving a 3-year-old one, 36,000 miles, maybe 40,000 miles, and I'm paying $500 a month. Who's winning, you or me? Exactly, you are. So that is the difference. When you are buying pre-owned, you lose in the short term compared to the person who got the great lease deal. But down the road, you win. 8 years down the road, you win. So y'all see what I'm trying to get you? What I'm trying to get you to be clear on is the long and short term of car acquisitions. This should be the main subject. That's why when you go in the book, when you hear me, I call this the most important question. I call this step 1, because you're getting a depreciating asset, goes down in value. What does that mean? I need to know how to work this thing in the short term and the long term. My long-term strategy, I need to think about now, because this thing goes down in value and it doesn't become a good product to own until year 7. I'm losing value every year. I purchase this car every year. I'm losing tons of value, but about year 6, 7, 8, now I'm not losing that value anymore. So I got to get there. I got to get to year 6, 7, 8. And that's when things are going to cool off for me, and I'm going to see these benefits of buying this car. Y'all get what I'm saying? If you understand type of 1, if you're following, that's the difference with understanding the short and the long term. And it's critical to your money that you're going to keep in your household. It's nothing more important than that. It's the foundation of your car deal. If your car deal is on the wrong foundation, nothing you could do. You paid more than you could have. That's why this is step 1. In the book, you'll see step 1, most important question, 8-year rule, leasing versus buying. You don't go to anything else before you make that decision. Okay? Perfect. What do you drive? I got an Infinity truck. I have all the, that doesn't matter. So it's what I pay. Ask me what I pay for what I drive. You get what I'm saying? Everybody was just, we talk about what hey, check out the new car. You see people posting, yo, new car, had to treat myself. Never talk about the money. You know what I get excited about? When y'all email me, Deshone, I just used your stuff. Check this out. Man, they asked me if I ever sold cars before. Man, they asked me where did I learn to get these deals. That's what I get excited about. I don't even got to know the car you got. You get what I'm saying? I don't even have to know the car you got. Email me about the deal. You get what I'm saying? I want you just as excited about the deal, the price you paid, the discount you got. I want you excited about sitting at home letting these people bid for your business and feeling like you're the prize. Email me about that, not what car you got. Tell me about what car you got second. All right. I owe $1,500 on the 2013 Infinity truck, but it doesn't run. Can I still use it as a trade? So we don't want to trade cars because we don't get our most money trading cars. You want to sell that vehicle. Now, and look, I'll give you things that take minutes to do that keep 1,000, 2,000, put 1,000 or 2,000 or 3,000 more in your bank account. So it's your choice if you want to do them or if you're going to be lazy, and I can't help you if you're going to be lazy, especially if what I'm telling you to do is simple and easy. So if it doesn't run, what you really want to do, because this is common, y'all, this is a common situation. We have a car, it doesn't run. Once that car doesn't run, it becomes almost worthless. It becomes almost worthless. Somebody got to get there, they got to tow it, they got to transport it. It's almost worthless. So what I always tell people is any money you have, you want to find a local mechanic. You want to get that car running. If you get the car running, you just multiply the value. Some people say, Deshone, should I get my car touched up before I sell it? If what you're doing doesn't exponentially increase the value of the car, don't do it before you sell it. If you go and you get some scratches touched up for $300-400, that's not going to increase the value of the car by usually thousands of dollars. You probably will just get back what you paid. But when the transmission's not working and you get a mechanic to help you find a used transmission or help you find a rebuilt transmission, whatever it is, and you put a transmission in there, I would not be going to the dealership for these repairs because dealerships are going to charge $2-3 times more than a local mechanic. Some of you who have a local mechanic, this is a great mechanic is like, I don't even know. They're like your right-hand person when it comes to cars. Great mechanic, somebody who is honest. Because here's what you could do with a great mechanic. I pull up, hey, something's going on with this thing here. Could you check it? And it's a relationship. So he's going to come out, check it out. Some of you know you've had a problem with the car and you're like, Dad, I got to take it to the dealership. If it's not under warranty, they charge you for the diagnosis. You get what I'm saying? So just to look at it, you're going to pay $90 or $100 something. You know what I'm saying? So that makes you nervous to go to the dealership. But if you got a local mechanic, you really don't have to worry about that. But what you want to do is you want to see how much it will cost you to get that vehicle on the road. Can I get a pre-owned? Can I get a rebuilt transmission? But the reason why you need a great mechanic is because a great mechanic can tell you what's necessary to get the car running. A bad mechanic will have you fix one thing, then another thing breaks, and then they're like, oh, I didn't, or they have you fix one thing, you thought it was the problem, and then they find out, oh, that wasn't the problem, but I didn't know until I did this that wasn't the problem. No, these are not the people you want in your life. You want the people in your life who are going to give you the perspectives, counsel you, and advise you of, all right, if you put $2,500 into this car, you get it running. I'm going to do this on it, do that on it, and it'll be great. Now, how you find these mechanics, social media is how I found them. Or you ask your family, because the best mechanics have been in town. They ain't new in town. That's a quotable. The best mechanics have been in town. They ain't new in town. So you want somebody who everybody knows, who've been there 10 years, 20 years, second generation. Town loves them. That's who you want to be your mechanic, not the person who just, hey, how long you been? Yeah, I moved from the cross country 2 years ago. Started, got my little shop here. No, sorry. So get the car running, then assess the value of what it's worth when it's running. And usually you'll find a car that you get running, you throw that on Facebook Marketplace, and that car is going to go for several $1,000s more than you would have assumed you could trade it for. Because cars are selling on Facebook Marketplace like crazy. So any car, I always recommend, it's in my book too, anything under 10 grand, if your car is valued, when you get the bids, in step 2, we get bids for our car from these cash buyers, these cash buying companies. And if that's under 10 grand, you may want to consider going to Facebook Marketplace, because Facebook Marketplace will usually get you $1,500 to $2,500, sometimes $3,000 more with a private party, especially if you just kind of put the transmission in, maybe you just put a pre-owned a rebuilt engine in, whatever. You're better off selling it to someone versus trying to trade it, because the dealer is not going to give you what it's worth. So that's just what we have seen that has made people more money. And you see how options. I want you to know options, because some of you are like, you've been so limited. No, you haven't been limited. Truthfully, you have been made to think you're limited in your options. I'm the type. This is what I do very well. Oh, you thought that's all? You thought that was your only option? Here's 2 others. Here's a better one. You know what I'm saying? So I'm great at knowing all the options, and then you run your route. What if the motor is going out on your car, but it's still working? Can you still sell it? Sure you can. Every vehicle has a value. It's just, are you selling it at its best? Are you selling it, what's the product you're putting out? Can I do something that will increase the value of the car? Because with an engine going out, the car's worth this. But if I can get the car worked, if I could get it like a BMW that's sitting there with no transmission is worth $1,000. You put a transmission in it, it's probably worth $6,000. So that's the name of the game. You only want to do things that when you look at what the value will be, and you could do this by going to CarMax, going to Driveway, going to the companies that are the cash buying companies. You want to find out, this is what we do to find out what our cars are worth. We don't go to dealerships. We don't go online and type in year, make, model, and then it says your car's worth $20,000. No, we get offers. And when you get offers, you will know, this is what my car is worth. I'm getting multiple bids. This is what it's worth. So when you get those bids, do it in good condition. And when you see what it's worth, if you say, all right, well, in order to get my vehicle in good condition, I got to fix the engine, then you'll know. So again, what I'm talking to y'all about takes minutes to do, but it puts $2,000 or $3,000 more in your pocket. It's up to you. All right, everybody that just jumped on, we do these live streams. I'm calling this segment, I'm pretty sure I'm landing on insider secrets to below market car deals, because I want you getting below market. I don't want you to ever use the term market value again. Like all over these websites, like they convincing y'all to pay market value, or hey, the market adjustment. Now you're paying over market value. Don't talk to me. I want y'all thinking below market value. Let everyone else pay market value. Let everyone else pay over market value. I want you thinking below market value all day long. Okay, so yeah, I think that's what we're calling it. So everybody who just jumped on, we're doing this show, and part of the show is the release of my new book. It's called Car Shopping for People That Hate Car Shopping. If you just jumped on, I would love for you to get a copy and use it and report to me how much you save in your car deals. You can get it for 75% off. It's a digital book. You download it immediately, and I update it. So the reason it's digital is because when something happens in the industry, you don't want to be stuck with a print book that I wrote 2 years ago. Room went out of business in January. If you were stuck with a print book you got from me, now it says Room, and then you go to Room and they're out of business. So digital, I literally update it to keep the information fresh. So all the thousands of copies out there, when something happens or a new strategy, or I rewrite a script, because all my scripts is in there, all my email templates, you're not saying anything. You're saying you're typing what I tell you to type. Once I adjust that, everyone gets the updates. Couldn't do that with a print book. All right, so go to my TikTok bio, download your copy, or go to my Instagram bio, download your copy, or scan the QR code, or go to deshonsbook.com, depending on what platform you're on. All right, I hit a tow hitch on the highway, and most mechanics wanted me to pay $500 for a new wheel. I found my favorite mechanic when he walked out with a sledgehammer and fixed it for $30. Thank you for that. Y'all see what we talking about? Y'all see what we talking about? You only need one. This person might take you a while to find, but when you find them, they're your person. And you send people to them. And what you'll find is after you send about 4 people to them, you're gonna start slowing down. 5, I send people, everybody to my guy, but you'll find they get busier because the great guys get busier. But that's what you want. He went from $500 about to come out his house to $30 because he has a relationship with a great mechanic. You need that. You need that. Ask around on social media. Ask your friends and family in town. Who do you know? Who does everybody trust? Who's been here 10, 15 years? And you go and you talk to that person. Okay. Where can I go to sell my car? Well, we sell our car through, we get bids on our car from the online buyers. CarMax, Carvana, Driveway, AutoNation, Kelly's Blue Book Instant Cash Offer, Car Guru, Sell My Car. You can do We Buy Cars USA. I like to get all the bids. You have no idea. You never know. And some people, I want you to never do this. I've seen people on the live. I've seen people in my comments, and they say, "Man, I always sell a CarMax. I always sell a Driveway." You don't. You cannot do a always if you're going to use a bidding system. You're either going to you see that's mixing oil and water. What we do over here, the new way we shop, getting bids, water. That old way of going back and forth with one person, oil, doesn't mix. And sometimes people mix because they'll say, okay, I came and I did the bid. This company won the bid. And now next time I need to do this again, I'm just going to go to them again. No, they have to win the bid again. They'll say, oh, well, this car dealership won the bid. So in 3 years or in X, when I want another car, I'll just go back to them. No. They have to win the bid again. There is no loyalty in a bidding system. You win the bid, you win my business. So when I see people that say I only do Driveway, I'm like, you're going to look, because you don't know. Sometimes these companies say, you know what, we need to buy cars this week. Put an extra 10% on every offer. Or sometimes they might say, you know what, we've been buying a lot of cars, we kind of need to slow up, scale back 10% on what we would normally offer, and whatever we could get, we'll just get. So if you are committed or tied into one particular company, then you're gonna lose. You're gonna lose. Welcome to the new people. I see a couple new followers. I see a couple new subscribers. Appreciate you all. Welcome, welcome, welcome. This is what we do. And we're gonna get a solid time. I'm gonna actually, if you're on my email list, you'll get notifications of when I go live. So that way, if you got the book, if you got my cheat sheets, if you got anything from me and you're on my email list, starting next week, I'll be sending out an email right before I go live or a couple minutes before. That way you can tell people, it's dangerous out here, y'all. Not just with the bad information that the public, that y'all, they throw at y'all. The bad information that they throw at y'all is and everyone wants to make a car video. I don't know if that's just me, but it does seem that way. It seems like everyone wants to make a car video. I don't know if it's the hot top or if it's been the hot topic or if they know, but here's they Dave Ramsey talks about cars. Dave Ramsey's a good guy. He has a good heart. Confidently wrong about leasing. Same problem with Sandra from earlier. Confidently wrong. So if you've listened to Dave Ramsey, if your family has listened to Dave Ramsey about life insurance, about investing in the stock market, about budgeting, then he's helped you. If you've listened to him about leasing, he's cost you thousands of dollars. So the dangerous part for y'all as all this information comes is, can you discern good information? That's where you have to be. You can't blame anybody for that. You see me right now, if you don't get great car deals, and I'm putting all this out there for you to get great car deals, for the rest of your life, if you don't save all the money that you should be saving, it's your fault. It's your fault because it's in front of you now. Now you got to discern. You got to be able to say, okay, good information versus bad. That's not always easy to do. But I'm telling you, your bank account depends on you being able to do that. Your bank account depends on it. So when I tell y'all about leasing, when I show y'all leases and tell you who leases are for, people who don't keep their cars 8 years, that is, you may not understand that yet. Doesn't mean it's not true. That doesn't change the fact it's true. So if you go out and say, you know what? He said, don't buy if I'm not keeping the car 8 years. And you go out and buy because you don't understand that yet, you just lost money, whether you understand it or not. So some of you will take me in faith and say, you know what? I'm just going to take it, whether you had a book or not, where you could see it for yourself. But you're just going to say, man, I'm looking at these results. I'm looking at these people who lease. It sounds like, it looks like, not even it looks like, they're paying thousands less. So let me go that route. That's what I would advise you to do. Even if you don't understand everything, listen to what I'm saying, put it to the test, and until it doesn't work. But you'll never get to that point. You will never get to a point where what I'm telling you doesn't work, because it's predictable. This business ain't hard. Getting great deals ain't hard. When you got the plan in an old, antiquated industry like the car business, and you come in with strategies, you're going to see, man, this ain't hard. You mess around stuff. I had a guy, and I'm going to tell you, and then we get back, we'll do a couple more questions. Guy hit me on Instagram yesterday, and he said, he was commenting, and he said, you helped me build my brand. And I see that he actually, he builds a brand. He gets people to pay him to lease cars for them. And he uses my strategies that he learned from me, and he shops for them. God bless you. Because once you see how easy it is to shop getting bids, and you see how much people hate it, you might be like him. Because your family going to see that you're no longer worried about it. When you tell your friends and family what you're paying, even when you purchase your cars, how much you paid for them, and they see, yeah, I did all this from home. I was only in the dealership for 30 minutes. And you got that deal? Wait a minute. Wait. Now you're going to become the person. Well, how'd you do it? Can you show me? Can you show me? Now, you might want to show them, give them my book, tell them about the book, or you might just want to say, listen, they might come to you and say, hey, if I get 300, would you do the shopping for me? And if you know how I shop, you're going to know it only takes me 60 minutes, 90 minutes tops to get these deals. So if you tell me, yeah, you know what? I'll take that 300. They might come to you and say, man, I'll give you $500 if you could get me a great deal on my next car. So that's what I'm saying. Not only is what we do better over here, it's less time, it's quicker, you're more in control. So the old way that y'all been trained to do, you've been attached to an old strenuous way. Get out of that junk. Get out of it. We bought a vehicle, but have a very high interest rate. Can we do anything about that? Because we've had it a year only. All you could do is refinance. Interest rates have been high. All you could do is refinance. You could sell a vehicle, but I don't. It doesn't sound like you're interested in selling. What I would do is I would just be checking, making sure you're monitoring the rates and looking for the right opportunity to refinance. If it was a credit issue. Now listen, people with good credit, some of them have had high interest rates, depending on the car they're buying. So it's not always a credit thing. If interest rates are high, interest rates are up. Now, if it's a credit thing, if you've improved your credit, then you can refinance into a lower rate. But you need to wait for rates to come down. So what I would do is I would Google refinance car loans online, and you would just monitor where those offers are, so that when the time comes, when you see the right offer to drop your interest rate, you just refinance the loan. But remember what I'm about to tell you. Don't duplicate the length of the loan. Everybody who wants to loan you money always wants you to borrow more money, and they want you to borrow it for a long time. Because the more money you borrow, combined with the longer the term is, the more interest they make on the loan. So they're always going to say to you, take a 6-year loan. They're going to show you a low payment. Don't fall in love with the lower payment. You've already paid for 1 year. When you go to refinance, remember this, everybody. When you go to refinance, don't look because they're going to say, hey, if you take it for 6 years, look at what your payment is. And if you fall in love with that payment, you miss the financial decision, which is, I already been paying on this car for a year, 2 years. Why do I want to now refinance into another 6-year loan? That means I'm going to pay 7 or 8 years overall. Don't do that. You want to take the highest payment you can afford. Very simple. If you look at it and they say, we're going to drop your interest rate from 10% to 6%, and they say, if you do it for 4 years, this is what you're paying. If you look and see, I could afford that 4-year payment, take the 4-year. Take the shortest payment that you can afford, because that's going to be the lowest overall paid for the car. Don't get hooked into a long loan again for a low monthly payment. All right. Auto auction. I don't talk about auctions. I don't talk about things that are basically, I consider it for professionals. Auctions are like, in my opinion, if we liken it to houses, it's like buying foreclosures. Professionals. Are there great opportunities in buying foreclosures? Absolutely. Have people gotten burned and lost their shirt buying foreclosures? Absolutely. So when we look at auctions, buying from auctions, that's for professionals. That's not, I don't teach that. If you want to learn that, find someone who's going to teach that, and just realize what comes with that. When you learn it, you get skilled in it, you can win. But that's not something that the majority of the public should be doing. Absolutely, my pleasure. All right, let's see. We got if I'm doing more than 80,000 miles a year, how can leasing best serve me? If not, will buying be my best choice? Great question. Great question. I hope you're still on. Person just said they're doing 80,000 miles a year. What that sounds like is they're doing, I have 3 strategies for high mileage drivers in my book, because everything's covered in my book. Get your copy now, 75% off. It's called Car Shopping for People That Hate Car Shopping. If you say to yourself, I hate car shopping, the book is perfect for you. You could download it immediately, 75% off. In my TikTok bio, click that link, and you won't leave the broadcast. So you don't have to worry about Deshone, I don't want to miss nothing. You won't leave. Click the Instagram bio, TikTok bio, get your copy before that timer hits 0 so you can get it for 75% off. Or go to deshonsbook.com or scan the QR code. Get your discount. 3 strategies in there for high mileage drivers. Now, you sound like you're doing something for business, because you're putting 80,000 miles a year on the car. You don't want to mix. It's funny because the young lady earlier said leasing is good for business people. That's wrong. That's who should be leasing, is what she said. But in your case, it doesn't. You don't want to lease, because the people who shouldn't lease are people who are trying to put as many miles a year on their car as they can. So if your car's on Turo, if it's a good year, you're going to put 40,000, 50,000 on the car. If it's a slow year, you're going to put 10 on it. So you can't predict the mileage. You're trying to keep that car on the road. You are not trying. You don't want that car home. And in that case, you can't predict the mileage. So you cannot lease without it. You can't lease. And so this is fine. Here's what you do. Here's what you do. Pay very close attention, because if you don't do this, you're coming in with cars that you're upside down in. High mileage drivers, you'll always have $10,000-$15,000 of negative equity every time, because you destroy your cars, and then you have loans on them. Your loan, here's what you want to ask yourself. You want to go down the road and you want to ask yourself, when do I plan on replacing this car? This requires planning. If you look and say, all right, I'm putting 80,000 miles a year on this car, when do I plan on replacing it? You might say, all right, I'm going to replace it in 3 years. Then your loan should be 3 years. Very important. Your loan, if you have a car that is on the road for business and you are making money in that car, you don't, when you say, I'm going to take a 5 or 6 year loan because I want my car payment to be $150 less per month, you're losing, because you're pushing your losses to the back. You're saying, I'd rather have $150 a month extra coming into my household, and I'll deal with the $15,000 of negative equity I'm going to have when I go to replace this car. Because now you're like, man, this car got 300,000 miles on it, but I still owe $12,000. The car is worthless, and you're 12,000 upside down, which means your next car, that $12,000 gets carried over, and your budget, whatever you could have budgeted, subtract 12,000 from it, because you got 12,000 in negative equity that got to go into that deal. Don't do that. That's pushing your losses to the back. Take them every month. When you say, if you're putting 80,000 miles a year on your car, you're making money. So what you want to say is, when's my replacement? If it's 3 years, I'm going to replace this car in 3 years. I'm doing a 3-year loan. Yes, my car payment is going to be $400 more per month. But here's the difference. I'm making money throughout the month, and I'm not pushing any losses to the back. So here's what's going to happen. In 3 years, when I go to replace this car, because it has 300,000 miles, it's paid off. Now it's an asset for my next transaction. What I just told y'all two minutes ago was losses to the back. They might jam up my next transaction. I come in with 12,000 negative equity. I might not even get the car I want. In this particular case, doing it the right way, doing it the financially sound way, now my car is paid off. Yes, it has 300,000 miles. I'm going to sell that thing, maybe make 5, 6, 7 grand on it. And now my next transaction, I'm doing it over again. So you high mileage drivers who got your cars out there on the road and you're trying to put 30, 40, 50,000 miles a year on them, you got to ask yourself, when am I going to replace that inventory? If it's 4 years, 4-year loan. If you could estimate and say, you know what, I think I could get 5, I'm gonna get 5 years out of it. When I get to 5 years, I'm gonna turn the inventory. Then your loan should be 5 years. No negative equity. You're gonna pay a couple $100 more a month. It's a business thing. That car generates money for you. So don't take the short-term profit for the long-term loss. Okay? But leasing is not for you if that's what you're currently doing. Everybody else, you should be leasing. Everybody else. And that's all in my book. I don't have the business part in there. So because I don't get that question a lot, but when I get it, that's how I break it down to business people. That's how I break it down to people who, have a car on the road. But I focus on what works for 99% of people. And in the cases of, rare cases like that, you ask on the show like this, and I'll answer it. Yes, you got your book. Thank you so much, Paul. Appreciate it. Enjoy it. Use it. And let me know when you make your deal. Email me, DM me. Let me know when you make your deal. Thank you, Prince. Enjoy. Thank you to everyone who got a book so far. Use it. What you're going to hear me say, you're rarely going to hear me say read it. You're going to hear me say use it, because it's step by step. Step 1 is the most important question, which you're going to ask yourself, how many years am I keeping this car? If the answer is 8, you're going to purchase. If it's 8 or more, you're going to purchase. This is step 1. When you open that book, you get to step 1. It's the most important question. The last step is step 7, and that's delivery. So by the time you get to reading my page on delivery in the book, You should be looking at your car, or you should be setting up the delivery. It ain't no, I read the whole book, or no. By the time you get to the page where I'm congratulating you, step 7, you should have your car. That's the way it's laid out. It's not a read and then take a test, and then I'm gonna go get my car. Thank you, Creepy Cat. Enjoy. God bless you. I have a book, but I think I'm stuck on step 3. Step 3 is budgeting. Step 3 is deal structure. So what are you purchasing or leasing? Step 3, y'all, after we do our equity assessment, we move to step 3, which is deal structure. This is where a lot of the money is lost. This is where you're going to do things like, we're budgeting for a deal. How much am I going to pay per month? How much can I afford? Do I have any down payment money? What should this lease cost me? The vehicle I'm looking at. What should that vehicle cost if I get a great deal on it? This is what we're doing in step 3. So let me know. But yeah, Bonetta, if that's what you're doing in step 3, you are looking at the vehicle you want and you're assessing what a good lease deal on it would be. I use 1.25%. So anything that I do, if I'm shopping for a lease, after I do my equity assessment, I look at the car I want. If it's $40,000, I say to myself, at 1.25%, that's a $500 payment. That's a $500. Now, I ask myself, is $500 in my budget? In order to get to 500, this car has to have a great lease deal. I got to shop my offers, and someone's going to win the bid. So that's how we budget. It's called deal-focused budgeting. I'm not just budgeting saying, all right, how much money do I have? How much money can I afford? No, we're budgeting for what a good deal should be. Okay? So if there's anything that you don't understand about that, definitely ask. You're talking about the equity assessment. Thank you, Paul. Yes, he said, I love that approach. Thank you. It's a strategy. It's literally you're armed with strategy, and you're coming into an antiquated, old, traditional machine. It's like you coming and using these strategies in my book and the stuff I teach, because I teach the same stuff. It's just everything in one spot. Those of you who have the book, you have everything I teach, everything I will ever teach about leasing, purchasing, getting great deals, selling leases, selling cars in one spot in an organized fashion. So that is what the book is. But I don't hold back on anything. But when you walk in to an old industry and you're using cutting edge new stuff, it's like they're just like you coming in running. And these jokers just like, what are you doing? It's like they're so far behind. They ain't gonna catch up to what we're doing for years because the industry is just so old and traditional. And unfortunately, most buyers still shop the old way. So you come in with cutting edge online shopping strategies, you in and out the market, and it's like that. It's an old industry. Are the scripts in the book to start the bids for lease? Absolutely. When we get new cars or leases, we use what I call in the book, I call it the 25-5 strategy. When we get a pre-owned car, you use what's called the multiple marketplace strategy. These are both in step 5. When we get to step 5, that's multiple offers. That means we're in the market. It's time to get our car. Step 6 is paperwork and protection. So you shouldn't even be at step 6 unless you done locked up your deal and it's time to talk about paperwork and any protection we need. But step 5 is when we're in the market. So step 5, in the market, you're using the 25-5 strategy for leases and new cars. You're using the multiple marketplace strategy for pre-owned cars. The 25-5, I'm showing you the websites. In fact, that's one of the spots where I link you to a video from the Cars from Home library, and I show you me on the websites for 25 minutes, literally pulling up going to all the sites, and I tell you where to go to contact, hit the contact tab, and you use my initial contact template where we tell them exactly what we want, what our time frame is, and we just copy and paste it to 25 dealers. That's how we do it in 20 minutes. People like, Deshone, how do y'all contact 25 dealers in 20 minutes? Just like that. Copy, paste, copy, paste, copy, paste, copy, paste, copy, paste. So everything we're doing is scripted because they're predictable. So I know what they're going to say because I had to use the same scripts they used. I was using those saying, hey, Mrs. Jones, I noticed. Thank you so much for your inquiry. When can we get on the phone? It'd be a lot easier if we could talk for a minute or two. I guarantee all of these scripts I had to use, copy paste. So car salesmen use scripts. So all I did, knowing the scripts that we use when I was a car salesman, is I just wrote responses to that to keep the daggone conversation on our terms. So I know everything they're going to say. They're going to try to get you on the phone. They're going to try to get you to come in. They're going to try to tell you we only do business in person. They're going to try to tell you this, and that's okay. We have our replies. You copy and paste my replies, and you keep the conversation moving. And you're going to see that list narrow from 25 to maybe 10 dealers that have a car you're interested in to 5 quotes. The cream rises to the top. And out of those 5 quotes, one of them is going to beat all the rest. Predictable. Works every time. They keep asking me to come in. They text and email. Oh, absolutely. 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 That's what they're supposed to do. I bought the book. If I have any questions, can I email you? Nicole, I don't have that set up. And look, here's what I can tell you. I got books all behind me. If you catch me on the live, you could ask a question about the book. But I can't get in touch with none of these authors. I don't think any of these authors even go live, so I could even ask them a question about a book that I have for them. So I do have a car, so the book is comprehensive enough. And like I said, if you catch me on a live and you want to ask a question about it, certainly do that. But I don't have it set. And you got to realize the magnitude of what we're doing here. Like, we're on 4 platforms. I can't show y'all my DMs. Y'all never believe it. Like, you can only imagine how many people need cars and how the DMs look. We can't help people in DMs. It's impossible. So that's the reason why we don't have it set up where I'm just reading emails and typing back. That would just be like a truly ineffective use of time. And I mean, I wouldn't be able to help people like that. So let's see. All right, we'll do a couple more. Shout out to everybody that got their book. Enjoy it. Let me know if it's still showing. Make sure it's still showing the 75% off price. As long as that timer is not 0, you still get your 75% off on the book. Download it immediately. I'm going to share this with the salesperson that keeps calling. Hey, good time. Listen, if they're a good salesperson, they don't mind competing. And if they're at a dealership where their manager won't let them go below a certain price to beat their competition, then you need to know that. You need to know that. Like, I could love you all day long. If I work for a dealership that's like, no, we're not discounting that car, oh, well, I'm going to lose. Because some dealer is going to discount and some dealers are going to discount even more. I would see that all the time. People will come on my videos and be like, nah, you teaching these people, man, we don't discount. Since the pandemic, no discounts. No problem. We buy from your competition. What the you think you're saying? You think you're talking to somebody who don't do this, man? I buy from your competition. I'm talking to your competition the same time I'm talking to you. I'm not even talking to you. You got a spot in my email. You got to show you're going to eliminate yourself. Some of y'all are going to be talking and you're going to see. Don't change that. You can't change the 80%. When we on my Facebook, I got a private Facebook group for people in my video course. Some people like access to videos. Some people like the book. Fine. And they'll say, Deshone, these dealers kind of, act like they're kind of giving a hard time. You think I should I give them? I said, no, believe the 80% when they show you who they are. When they say, the 20% are the people we're looking for. They make purchasing from home easy. They're willing to compete. They're willing when you counter, when we make our offers to say, all right, listen, if I could do this, can I? That's the 20%. The 80%, if you think you're going to turn the 80%, the liars, the wolves, the sharks, into somehow these magical, wonderful people, you're fooling yourself. Because here's what the 80% will do. They'll make you think, they'll tell, hey, yeah, I'll do this, I'll beat that deal. And then when you get there, they're going to snatch you with something else because they're the 80%. They lie. So don't try to, we're sorting. When you use this new style of shopping is sorting to find the best people. You're sorting for the best used car dealership. You're not, because it's 17,000 new car dealers in the country. It's 100,000 used car dealers in the country. I could tell y'all confidently, 80% of them they will take your head off. 80% of them don't care about you getting a great deal. They care about business and the register ringing. But 20% are incredible people. They are here in the business to serve. They want you to have the best product. They want you to have no issues. If there's a problem, that's the 20%. But the 80% is sprinkled the majority of those 100,000 dealers. So what do? We got to sort. And you can't sort getting in your car, driving to them. You sort sitting at home and using this tool that is one of the most valuable tools called the computer. And you're going to be amazed. It's a Benz deal, and the salesperson says, my old one got moved to a sales manager. All right, that's fine. Just follow your process. Don't let a car dealer lead you down their process. What's the best way to estimate the miles I drive a day looking to get a lease? Good question, Chris. I actually have a section in the book called How to Estimate Your Mileage, but this is it in a nutshell. Easiest way is to look at what you drove your past year. If you have a car, look at what you drove in that car the past year. Now, if your lifestyle hasn't changed, that's the best indicator. If maybe your lifestyle has changed or you don't have a car to do that with, here's what you do. Where am I going? All right, I'm driving to work. How far is it to work? 12 miles each way. Perfect. How many days a week do you do that? 12 miles each way. That's 24 miles every time you go to and from work. How many days a week do you do that? 5. Okay, perfect. 5. That's 120 miles a week you're putting on the car for work. Majority of our mileage is always going to come from work. In most cases, and almost all cases, it's going to come from work. So now we take that weekly mileage, we multiply by 52 weeks in a year. That comes out to 6,240. We're doing 6,240 miles a year for work. Now what's leisure? Well, I like to go on a vacation. I like to drive down to, do this. How long is that trip? 500 each way. Okay. How many years? How often do you do that? And if this is too much for you, you don't deserve to win. If you sitting here saying this is a $30,000, $50,000, $100,000 acquisition, I'm telling you how to do something that you weren't taught to do that takes 1 minute to do, easy. Don't let laziness and habit keep you in this old system of losing money. So you add your leisure mileage, and I've had people who say, Deshone, my kid is going to college. I'm going to be out there probably 4 times a year. Okay, how far is that trip? 1,000 miles. Okay, perfect. That's 4,000 miles a year you're doing to and from college. Now you add your work up. Now you add this up, and they're like, yeah, I need like 14,000 a year. Perfect. Done. Just go into your lifestyle. Done. All right. Simple book. That's also in day 3. In day 3, deal structure. That's one of the things when if you're on the lease path and you're using my book, you get to a point where it says how to estimate your lease mileage in step 3, which is deal structure. Structuring your deal. Structuring your deal is, I talked about earlier in the broadcast, the person who knew they needed 15,000 miles a year, but they got 10. Now they're going to have a bad lease experience because they're going to be billed at the end for the mileage that they used that they didn't want to pay for, but they're going to pay for it because they used it. When you build it in, it's cheaper up front. And that's a decision that deal structure ruins the experience. When you skip deal structure, it leads to a bad experience. It leads to penalties and it leads to money loss. So structure your deals the right way so that your experience is great. Okay. I have a 23 Hellcat jailbreak, 3,000 miles on my lot. Okay. So what I want to see, this is a person who's trying to sell somebody a 23 Hellcat, 3,000 miles on it. I want to see every Hellcat within a 200-mile period, 200-mile radius. Because whatever you're asking for that car, if it wins the bid, see, cars are cookie cutter, y'all. See, there's somebody who's driving past that Hellcat right now, and they're like, ooh, that's a nice Hellcat. And they're gonna go and look at it, or they're gonna go talk to this person about buying it, and they're gonna either overpay or they're going to have no price assurance. Overpay means I don't know what he's asking for that car. And there was a similar Hellcat for less money. That means you overpaid. Now let's just say there was no similar Hellcat for less money. You don't have price assurance. That's called buyer's remorse. That's called, oh man, did I overpay for this? Price assurance means I can guarantee to myself, this is what you want. If you want price assurance, type PA. Price assurance means you don't drive off in a car without guaranteeing to yourself that I paid less for this car than any other option. That's price assurance. And it's easy to get when you compare. So I'm going to look at every Hellcat in 100, 200 mile radius, depending on the price. The more expensive cars, we go further. So if it's a very expensive car, rare car, G-Wagons, I might do the whole East Coast. I might do the whole country. Because when the higher price you get into these cars, the more potential it is for you to overpay. Like if you're buying a Ferrari, you could overpay by 50 grand. You could literally, you could there might be the G-Wagon. All through the pandemic, people were doing $50,000, $75,000 over sticker price, but there was a couple of dealers who weren't doing markups at all. So anybody who got those G-Wagons that paid $25,000, $50,000, $75,000 over sticker, that's how much they lost. They overpaid by $50,000. So the more expensive the car, the more potential it is for overpayment. But when you shop your offers, when you see the whole market and you see all the options, never happens. Never happens. That's why people want you tied and hooked to them. Look at this car. Don't look at no other car. What can I do to sell your car today? What can I do? Can I make you an offer so good you won't even go look at nothing else? Now, if I'm sitting on 20 grand marked up, if I'm sitting on 6 grand marked up, I'm setting you up like a black widow. Listen, you like the car, man. I just want to go see some more options, man. I saw this guy online. I didn't get his book. It was only $24, 75% off, teach me all this stuff, but I didn't get his book, but he told me I should always shop around, man. So I think I'm going to go shop around, man. Listen, is there a price? Listen, you like this car? Yeah, I like the car. I told you that. And I told you I like this car. Okay, let me ask you, is there a price? I'm asking, you see what I'm asking for the car. Is there a price that I could offer you right now where you won't even go look at anything else? Man, shoot, bro, it's not going to be a price you like. I'm just saying, you don't know what I'm sitting on. See, I'm letting you see that negotiation table, what happens. I'm taking you into the psychology of the negotiation table and why, in order for you to win, you can't compete with somebody who's trained as a car sales negotiator. You cannot compete. We know the psychology. We know what to say. We know you're in our house. You see our product. That's like me coming into your house and I want to buy your house. And I'm just, wow, this is an incredible house. I'm going to pay. Like, I'm going to overpay. I'm emotional. So if I'm talking to you and I'm like, look, what's the price? Name a price. You're not going to offend me. Look, worst case scenario, I can't do it. Look, but if you don't throw it out there, maybe I won't even know. Now, some people, depending on, who you are, it's various numbers that's going to come out. Yo, take 10 grand off. Man, no, I can't do that. That's crazy. Maybe I can, depending on the car. But, oh, man, even if, no matter what you say, a great salesman is going to say, oh, nah, bro, I didn't know you. That's more than I thought. All right, that's more than I thought. I take off $2,000. Oh, man, I thought you was going to ask for like $500. Psychology. It's called the takeaway. I told you make an offer. You thinking you about to empower yourself by throwing an offer out, I immediately shoot that offer down. Oh, hey, man, I create doubt. I don't think I get that done. But if I could, let me ask you, I'm going to go talk to the manager. If I could, now I know a salesman who know he's sitting on 5, 6, 7 grand, whatever, and you ask him for something that he know he can do, the deal's done. But I can't tell you when you say 2,000, take off 2,000, we got a deal. All right, done. I get it done. No, got to create doubt. Psychology. I'm mentally going to, this is what salespeople are trained in. They ain't trained in the stuff I talked about earlier in the broadcast with Sandra. Finance, depreciation, resale value, buying versus leasing, to counsel with you. They trained in the psychology of mentally playing with you to make you think you won and driving and getting the deal done. So you can't compete. You got to step out of that world, and you got to be talking numbers while you in your house. You got to be talking numbers via computer. You got to be talking numbers, multiple people at one time, competing for your business. When you do that, you ain't got to be good. You ain't got to have the best words. You ain't got to be smooth with what am I going to say. Smart, work smart, not hard. My old saying, let's crunch some numbers and see what we can do. There we go, Don. We got Don as a car salesman. He understands. He understands. Let's crunch some numbers. I could know I have a deal. $500 a month. Can you do 500 on that? Now, I done did enough deals on that car to know I could do 500. Got to create doubt. That's tough, man. 500. Most people pay $7 for this car. This is what you are competing with. You can't compete. I want you to step out of this world and work smart. Come with a new machine where they can't figure you out now. Where you're psychologically saying, oh, I could buy a car today, but you know what? I got 60 days before I got to make it. I want you to operate with a better system, better psychology. So that's what we're talking about on this show. I'm trying to teach you to come out of the old way of shopping and step into the new way of shopping. You got to understand some things. You got to understand leasing versus buying. 8-year rule. If I'm not buying my cars, if I'm not keeping my cars 8 years, I'm not buying it. I'm going to shop for an aggressive lease. And I'm going to follow a system where I'm getting bids, not negotiating one-to-one. Bids, multiple offers. I think in the next hour, when I come back, we'll talk about the bank bids, because a lot of you don't know. You hear me talk about the selling of our cars, not trading. You hear me talk about getting bids for selling our car. You hear me talk about getting bids for buying our car. But the same systems exist with the banks. Getting bids from banks and credit unions so that you can stop asking a dealership what's the best rate, or giving the dealership an opportunity to get you your best rate instead of giving them an opportunity to beat the rate that you already got. Everything's a bid. Some of you are like, Dad, Deshone, you do the bid for the loan too? Everything is a bid. There's a saying, everything's negotiable. Everything is a bid. All right. So thank you to everybody. Get your book. As long as the timer is not 0 yet, you get it for 75% off. Everything that I teach, everything I will ever teach is in my new digital book, Car Shopping for People That Hate Car Shopping. 7 steps to saving time, money, and avoiding dealerships. Click the picture of me on TikTok or Instagram. Go to that link in my bio, and you'll see a tab there that says 75% off on the book. If you're on YouTube or Facebook, go to deshonesbook.com or scan the QR code. Get your book, use it, and make sure you keep me posted to your success. And thank you to everyone who's reviewed it. Like, this is amazing. Like, before we even released the book, officially released it earlier this week, we were already at a 4.94 on Goodreads.com, 27 reviews, 31 ratings. Thank you so much for all of you who have reviewed the book so far. After you use it, or you could review it once you read the first 2 pages and you're like, man, this is good right here. Feel free to click the link, go to Goodreads and review it, because this is how more people find it. But I'm very, very happy to see that we're at a 4.94 rating and we just released it. So use it. People are enjoying it. And certainly, thank you. You dropped some game, brother. Thanks. Thank you. D-Moves, I appreciate you. Thank you to everybody who tunes in. If you're on our email list, you'll get the email when we go live so that you're always notified. And let's continue to save this money, y'all. God bless. Watch your money. Be smart. Move different. All right. God bless y'all.